Welcome back to another Meet Kevin report, number 63. It is March 26th. Mitch McConnell's out of the hospital. He's going to be working from home before Congress resumes work. And there's now a lot of concerns surrounding this Archegos dude, who was one of the big reasons that we started potentially seeing banking crisis woes. Archegos Capital Management has been pushing for a waiver of some of the 11 counts of fraud and deceit for manipulation of 7 publicly traded securities. And so a lot of folks have been wondering, this guy better face justice, because Archegos potentially was the tip of the iceberg for all of the drama that we're seeing now. And it's not to say the drama we're seeing now wouldn't have happened otherwise, but some say Archegos was the tip of the iceberg that led to the fall of Three Arrows Capital, which led to the fall of many crypto companies, FTX, Voyager, BlockFi, which led to the collapse of Signature Bank and Silvergate, which led to the collapse of Silicon Valley Bank, then Credit Suisse. In other words, it was all a long connected domino that went back to some of these original losses thanks to this Archegos Capital Management. Kind of wild to think about how all of it could be so connected back to one person who basically YOLO'd a $1.5 billion portfolio, somehow turned it into $20 billion, and then became a millionaire by turning it into, well, actually bankruptcy, so less than a millionaire. Pretty wild. So many things to cover today, especially we're going to touch, we'll go in order here today. We're going to talk crypto. We're going to talk banking crisis. We got to talk Iran, Inflation Reduction Act. We've got Congress fighting back. We've got short sellers. A lot of people have been asking me how to short commercial real estate, so I have got some insight for you on that. And it should be pretty entertaining. A lot of information. We'll put it that way. So but I think that's good. I think that's the point of why we're here, is to learn insights and perspectives. So let's go ahead and start with the crypto segment. Well, Morgan Stanley just released an incredible piece on Bitcoin, and it gives us some insights into what actually might be going on with Bitcoin price action. And it's probably not what you think. In fact, it's pretty remarkable that potentially one organization controls over 80% of Bitcoin trading volumes, which then makes you wonder, is Bitcoin's price action correlated with the market or a company that's bumping it when they want to? Hopefully we don't get bogged. But let's talk about this Morgan Stanley piece. Right after I mentioned, thank you for being here. And remember Mr. Kwan, the Tron co-founder, who was arrested in Montenegro carrying fake Costa Rican passports? Well, apparently there was an interview just about a year or so ago where Mr. Kwan ended up talking to somebody, a pharmaceutical executive, who was sentenced to 7 years in prison for fraud. And that pharmaceutical executive, remember, Kwan was one of the founders as well of the Terra Luna disaster here. That's why he was so heavily investigated. But what's remarkable is he was in a podcast with this executive, and the executive says, hey, I just wanted to let you know, jail is not that bad. And then Mr. Kwan apparently turns and smiles to the camera and nods, because they were doing sort of a Zoom interview apparently here. Good to know, he says. Anyway, again, Mr. Kwan, 31 years old. He was arrested in Montenegro. Pretty crazy here. So anyway, let's get into this Morgan Stanley piece, because it's pretty incredible. All right, let's see here. And if I mentioned Tron, I meant not Tron, Terra Luna. Sorry about that. Yesterday, I was looking into Tron. Okay, let me clarify this. I want to make this very clear. Mr. Kwan is not Tron. The Morgan Stanley piece ends up talking about Tron. Sorry, I misspoke on that. So I don't want to cause any kind of confusion. But anyway, let's get into the Morgan Stanley piece so we can be clear about that. All right. And here it is. Okay. Sorry, one sec. Let me fix this. Okay, here we go. Why is it not, there it is. Ah, finally got it. Okay, here we go. Take a look at this Morgan Stanley piece, which is kind of scary because it shows us that the vast majority, potentially as much as 80% of Bitcoin's trading action is controlled by just one company. Ready for this? Here it is. Binance, folks. Listen to this Morgan Stanley piece because it's pretty dang detailed and it's worth understanding what they're analyzing and what the implications of this could be for Bitcoin because it's a really big deal. So look at this. Expectations of US dollar liquidity support have helped BTC rally. That's something that Cathie Wood told us as well, right? Cathie Wood told us, see, look, Bitcoin's going up because banks are having problems. And so if banks are having problems, maybe that's why we can say, oh, look, BTC is going up. BTC going back up to another fib retracement line. Nice skyrocketing there on BTC right as the banking crisis begins. And that kind of makes us think, oh, maybe Bitcoin is a tool that people could use to flee the dollar and have a safe haven in Bitcoin. And maybe a lot of people are doing that. But is that actually what led to the price rally for Bitcoin? Well, Morgan Stanley looks at blockchain analytics to find out, and the results are somewhat surprising. Let's take a look, or potentially not surprising. Anyway, listen to this. Traders on Binance now set the daily price for Bitcoin as the exchange's volume takes 80% share of the market. In other words, 80 cents out of every dollar of Bitcoin that are traded occur on the Binance network. Now, this is interesting because it comes right at the same time as Binance actually decided to dump $1 billion of Binance USD and turn it into Bitcoin. So it kind of makes you wonder, we'll go into it with a little bit of Jade and we'll see what Morgan Stanley says. Wait a minute, what happened first? Did the banking crisis occur and then did traders flee to Bitcoin, hence leading Bitcoin to rally because they were seeking safety for the dollar? Or did the banking crisis occur, which would be the perfect opportunity if you had control of a lot of Bitcoin and other extra cash to liquidate maybe a stable coin and pump Bitcoin to make Bitcoin seem more valuable, especially if you happen to be the brokerage responsible for 80% of the trading volumes? Well, to answer that, we would have to know what accounts are actually transacting most of the Bitcoin around the time of the banking crisis. And we happen to have an answer, thanks to Morgan Stanley. So let's take a look at this. So the narrative quickly turned in the traditional banking sector that basically the weaker the traditional banking sector, the higher the Bitcoin price. This has been the narrative of the very pro-Bitcoin movement. Again, this is why Cathie Wood reiterates her $1 to $1.5 million price target for Bitcoin. And the market is focused now on whether the Fed will inject more liquidity. In other words, if we're going to see more pumping of dollars or more printing of dollars into the Fed's balance sheet and therefore into the economy, then maybe we'll see BTC move as well. All right, let's take a look at this. BTC has outperformed other risk markets, currently trading at about 10% stronger if we use its prior relationship with the NASDAQ. So in other words, Bitcoin is actually outperforming multiple different markets right now. And it's actually quite neat to see this because you could jump over, I'll go forward a little bit. Look at this over here. Here's Bitcoin versus US cyclicals. This is kind of interesting. So you got Bitcoin outperforming cyclicals. And look at this, US cyclicals versus defensives. That's this right here. And then Bitcoin actually outperforming. By the way, I love as I'm filming this, people think I'm like super like anti-BTC. Somebody just donated $5. Stop hating on Bitcoin for not getting in early. I swear, as soon as you mention Bitcoin, there's like this unleash of bots and people don't actually care what your information is. Notice how I actually haven't gotten into any of the information yet. And some people are already upset. Like, I think it's one of those things where it's like, what? Somebody has information? No. Don't want to hear it. Don't want to hear it. That's fine. Listen, if you don't want perspectives, just leave the video now. Okay. You don't belong here. If you want to stay dumb, put your head in the sand. You don't belong here. I'm going to keep going now. All right. So So Bitcoin's actually doing interestingly well by decoupling of what some people are saying, decoupling from cyclicals here. Look at this, BTC blue line, yellow line over here, cyclicals versus defensives. You're actually seeing a pretty good correlation here, and then you get this break right here. So you get a break around the banking crisis. The same over here with the Bitcoin correlation to NASDAQ. Look at this, rough correlation here. I mean, you could say that's pretty well correlated right here. And then all of a sudden we break on BTC, okay? Now, what do we got here? Here, we have a very weak correlation to gold for Bitcoin. This is a lot harder to kind of draw a midpoint over here on BTC and gold. So the correlation isn't too clear between gold and BTC. That's leading some people to say this isn't digital gold. So what do we have over here? Here we have M2 money supply growth and Bitcoin's market cap. And this makes sense, right? The more money is printed, potentially the more money there is that could flow into digital exchanges and lead Bitcoin to go up. That makes complete sense. So that's actually very interesting because it shows us that Bitcoin is very sensitive to the flow of money, which if we're printing more money right now, maybe that's why it makes sense that we're starting to actually see BTC prices move up. See, I got them on the chart right here. If we go out to the daily, what do we have for BTC? Well, look at the bottom of BTC on the chart over here. We're looking at, on this day chart, we're at about March 9th, right before the banking crisis, right? So we kind of have seen Bitcoin pump since the banking crisis. And it's really pumped in a way where it's decoupled from its prior trends, its prior association with stocks here and the NASDAQ. Okay, interesting. So why is this potentially? Well, let's take a look. So Binance dominates Bitcoin trading on exchanges. Binance cut Bitcoin trading fees to 0 last July and has continuously been gaining market share. That's actually pretty incredible. So as Binance basically was available with 0 trading fees while BlockFi, Voyager, and FTX died, what happened? Binance actually ended up taking a substantial market share at those times. So kind of brilliant. Look at that. Right around July, right before the collapse of a lot of FTX and right around the time of the collapse of Voyager and right after the Three Arrows Capital disaster. So it's really interesting that you're seeing Binance pull in so much of a share, 81%. They basically control Bitcoin trading, okay? And this is why Morgan Stanley says our conclusion is that traders on Binance now set the daily price for Bitcoin. This makes logical sense, okay? Then what do we have? Investors mostly ask us about Coinbase, as that is the largest listed crypto stock company. But we argue that flows on Binance more closely explain what's going on in the market. For example, after Bitcoin rallied 40% in January, the volume of Bitcoin to USDT traded on Binance reached a 38x that of the equivalent pair on Coinbase in early 2022. So why do they explain this? Well, they suggest that people might be liquidating a stable coin essentially and buying BTC. And they see those volumes of those transactions match rallies in Bitcoin prices on Binance, but not on Coinbase. Interesting. So what's this? Bitcoin order book liquidity is poor, reaching the lowest levels in over a year. Okay, that's actually really important. So when we think about a small stock, for example, and we look at a penny stock, maybe something that's trading for $4 with a market cap of, I don't know, maybe it's got a market cap of $50 million. So a really small company, to some extent, it's a micro cap company. If you take a small company like that and you move just $500,000 into the stock will probably pump substantially because the order book is generally very thin. The order book is really just a list of who wants to sell and who wants to buy. And the goal of an exchange is to help match buyers and sellers. Market makers can come in and provide liquidity by filling orders at various different prices. So the thinner an order book is, the more sensitive to price a security or some sort of asset is. Here, Morgan Stanley alleges that right now, Bitcoin's order book is very small. Liquidity is very low. This means smaller trading volumes can have a larger influence on price action versus before. Liquidity has been deteriorating since Alameda closed in November, as they were a large market maker. Most of the BTC rally this year has occurred during US trading hours, and when Bitcoin rallied 15% on the 13th of March, the largest buyers of BTC were from large wallets, many of them likely to be exchange wallets. Okay, now that's interesting. All right, so what are they essentially alleging here? Well, take a look at this over here. This is what I wrote. Remember, Binance just moved $1 billion of BUSD into BTC. In my opinion, that's actually a very risky move. You see, I wrote all these opinions down here. That's a very risky move because these could create repercussions for the crypto market that are actually very dangerous. And I think it's very important to consider that I'm saying here could be, right? Like, in my opinion, if the market Nike swooshes, that is, we had our Stark down already and we Nike swoosh up with volatility, then crypto should be fine. Should be, right? The problem is, if there's some sort of exogenous shock, like, something that cripples the stock market, or inflation that remains sticky, or a furtherance of the banking crisis, or people wanting to withdraw their money from everything, whether it's banks and crypto or whatever, right? Some kind of shock that puts more stress on the brokerages that remain, like Kraken and Binance, could end up creating substantial strain over at Binance, since what they're really doing is they're taking more of their cash-backed assets and they're basically buying Bitcoin with it. That, in my opinion, is a weakening of Binance's risk tolerance. And this follows them basically dumping their proof of reserve audits, which would never show what liabilities were staked against those, but at least we got some kind of audit into the asset side, which is relatively worthless anyway, because if you only know what the assets are and you don't know what the liabilities are, what's the point? We already know, or at least I should say suspect. We don't want to get sued by Binance, but we already suspect that if Binance has 3 coins that are each, let's say, worth a market cap of $1 billion, we already suspect that there's probably only $1 billion of cash. So when Binance tells us, oh, that coin is 100% backed by cash, sure it is, as long as it's not also backed by cash, as long as that cash is not also being used by the other coin, which it probably is, as long as it's not also backing the other coin, which it probably is. But we don't know because there's no regulation over here, right? So in other words, Morgan Stanley is giving us this sort of cannon fodder to suggest, wait a second, if exchanges are the ones who are pumping crypto, specifically Binance, who controls 80 to 81% of market volumes, isn't it possible that an exchange like Binance could actually be perpetrating a purposeful pump during the banking crisis to make Bitcoin appear more desirable, and therefore manipulating people like Cathie Wood into thinking the pump in Bitcoin price was actually organic, when the fact is it was not. It was an inorganic pump led by exchanges. Well, take a look at this. Bitcoin's 15% rally on the 13th of March saw large wallets, large Bitcoin holding wallets, wallets basically holding between 10,000 to 100,000 BTC. These wallets were the ones who exchanged the most, and they're likely exchanges. Take a look at this. If we zoom in here, you're going to see these are the small wallets, right? These are us normies over here. Small, 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 small. All the small wallets, which hold less than 1,000 Bitcoin, which could be as much as a decimal of a Bitcoin, 1 to 10 Bitcoin, 10 to 100 Bitcoin, up to 1,000 Bitcoin. All of the small wallets added during the banking crisis, which is fantastic. But look at this. Medium-sized wallets dumped massively. The 1 to 10,000 crypto wallets dumped. And then what do you have over here? The exchanges pumping. So it makes me wonder, while it seems easy to explain the idea that, hey, banking crisis, let's all go to Bitcoin. Well, that is what normal people did. Individuals did exactly that. They bought Bitcoin during the banking crisis. But it wasn't just them. It was exchanges who actually ended up leading to the vast majority of the trading volume right here, pumping Bitcoin on the 13th of March when the banking crisis was occurring. Now, that's incredible because it makes you scratch your head and wonder, wait a second, is it possible that this is a total manipulation and that CZ over at Binance are in complete control of what happens with Bitcoin? It is possible. Now, there's some more information here because take a look at this. Total stablecoin market cap has been falling while BTC has been rallying. Now, that's weird because usually you actually see stablecoin values go up in coordination with Bitcoin going up. Tether, the largest stablecoin, has seen issuance go up 10% in the last month and 16% this year. But, quote, that has not been enough to compensate for the reduction in other stablecoins, notably BUSD and USDC. Over half of all Tether and 70% of recent, over half of total US Tether and 70% of the recent issue has been created on the Tron blockchain, the company that's now behind a subject of a lawsuit with the SEC. That's fine. I don't know that so much matters right now. I mean, the SEC is coming after crypto, period. We know that. But I want you to think about this for a moment. So banking crisis happens. And what happens? People think buy BTC. But exchanges make the biggest moves while dumping stable coins into BTC. Is this then engineering the pump that people would expect, potentially leading more people to want to buy BTC? And four, since Binance controls 80% plus of trading volume, doesn't it make sense as almost a free advertisement to pump BTC and then take 80% of BTC flows at Binance? So there is a really clear, crystal clear argument here about this basically crypto whales manipulating the market. Now, we're not saying that doesn't happen in the normal market, but that's not a defense. You know, that's like somebody saying, oh, John murdered Sally. Yeah, well, Will murders people all the time. That doesn't mean John murdering Sally was okay. That's a stupid argument. Just because there's fraud doesn't mean it's okay to do your own fraud. It's crazy. Anyway, BTC trades similarly. Okay, now we can talk about the 4-year cycle of BTC as well. But I think it's really interesting because while you're seeing stablecoin issuance go net down, BTC is pumping where it would make sense to pump it, but statistically, it's actually the exchanges pumping it. As Hexflex here says, it creates fake volume. Exactly, fake volume. So take a look at this over here. Crypto exchange traded products and ETFs have actually seen outflows despite Bitcoin's price rising. Now, that's also very interesting because take a look at this. If you go over here and you say, hey, institutions like banks and money managers are saying, we don't want exposure to BTC, then what you're seeing is stablecoin issuance go down. Institutional money managers, wealth managers, banks, individuals buying, crypto-related exchange products because, we only have futures, ETFs and stuff. If you're seeing these go down, then it seems like normal people really don't have the power to actually make moves in BTC's pricing. Instead, it just happens to be people like CZ who are able to, at the drop of a hat, say, we're just going to dump a bunch of our stable coin and we're going to go buy Bitcoin. We're going to go buy the dip. Okay, that's a little bit concerning, though, because if the market is basically being propped up by Binance, this chart right here, by the way, shows you the trading volume that Binance has, right? Look at this, Binance share of BTC exchange trading volume. If you see this explosion here in Binance trading volume, then really what you're suggesting here is Binance basically owns Bitcoin. They basically own the market. Now, this drives me nuts as well. They say this here, a word of caution on the reported data. We analyzed information on exchange Bitcoin holdings based on wallet information provided by the exchanges to the markets. Unfortunately, when cross-checking the data, it left us with more questions than answers. I've had the same problem. It always seems like the wallet addresses that we get from CZ only paint part of the picture. You don't get a full image. And part of this is because what the exchanges keep doing is they keep making new addresses. So they have these massive addresses, and then they create a bunch of smaller, mid-sized addresses, and they move stuff around like crazy. Everybody says, oh, but the blockchain, it's transparent. You could follow everything perfectly. It's not that easy. There's a reason why there are companies that make tens of millions of dollars as crypto analytic firms just to try to trace what the hell is going on, because there are so many ways to obfuscate how or where your money is actually going. I mean, all you have to do is understand the basics. Well, A, hopefully if you're talking crypto, hopefully you understand the basics of cryptography. But then B, hopefully you understand how simple it is to manipulate wallet addresses using services similar to, I use this name even though it closed specifically because there's so many others like it, but everybody knows this one, like a Tornado Cash, right? It's very easy to hide your trail, so to speak. But anyway, I find this fascinating because to me, it sets up a risk factor for BTC that essentially says, if, in my opinion, this is my opinion, so let's make this very clear. First, I think you should, after all this, get life insurance in as little as 5 minutes because there's a link down below and it's awesome. It's what Lauren and I use and it's great. Second, if you want to make sure you can buy some BTC over here, you could actually do that on Webull if you want. Go to metkevin.com/free and you could get up to 12 free stocks on Webull. And if you wanted to, you could sell those stocks and buy BTC. If you want to, it's not personalized financial advice. And yeah, that's a paid sponsor. But let's go back in over here to my opinion. Push that button. I figure out where the buttons are. Okay, so my opinion is as long as the market goes up, this is going to be the broader market, right? That is, so let's put the AKA, inflation down, rates stable, higher for longer, doesn't mean deep recession / credit squeeze. Then it's possible Bitcoin and Binance will be just fine. But what they've done in the meantime is they've lowered their risk, or I should say their protections. So they've actually increased their risk, right? They've lowered their hedges to risk. So they've increased their risk by converting more stable coins to BTC over at Binance, which happens to be an exchange that controls over 80% of the market. That's scary. So that's something that's really important to pay attention to. Now, some people in the comments say, you're late, Kevin, your FUD won't work. What I think is phenomenal is actually the 4-year crypto cycle. The 4-year crypto cycle has been holding up, and we might just be in the midst of the next 4-year crypto cycle. I'll pull it up over here, but it's actually been doing quite well. Let me see here. Where's that 4-year? Oh, this is time zones. I'll explain time zones. We'll go to the bullish part about the 4-year time cycle here in just a moment if I can find the darn thing. Anyway, I'll find that in a moment. But what's interesting is I really believe, and I feel so terrible for people. 2 more things we got to talk about, by the way. We're going to talk about Bitcoin ordinals, time zones, actually 3 things: ordinals, time zones, and then we've got to talk the 4-year cycle. But quick note, I love it when people are like, why are you fudding? That's all you do. They sound like babies. Like, honestly, if you use the word FUD, you sound like an uneducated idiot, and you should stop using it. As a friend, I want to be able to look at you in the eyes and say, you shouldn't use that phrase anymore because it makes you sound like a dumbass. Because FUD is fear, uncertainty, and doubt, but you're using it in a way that assumes it's fake news. But fear, uncertainty, and doubt are not fake news. They're actually important things for you to be aware of. Like, you got to be aware that there's a counterparty risk in stablecoins, as everybody today has learned when brokerages have collapsed. This is the same thing we talked about years before brokerages collapsed. And guess what people then said? Just fun. Whatever. Stay stupid. So anyway, so take a look at this. So over here, you have Bitcoin rallies by time zone. And I thought this was really interesting because look at this. You have US time zones representing most of the buying right here. 40%-ish for Bitcoin buying and selling occurs in US time zones, AM and PM, about 22, 21%. Now, what's interesting here is I don't know that this necessarily means these trades are occurring in the United States. So right here, I wrote the following. It doesn't mean that you couldn't schedule Bitcoin trades in US time zones from the United Arab Emirates, where CZ happens to hang out all the time because he's too afraid to go to the United States because he's going to get invested and he'll be just as much of a top G as Andrew Tate in jail. Now, we'll see. Who knows? Andrew, maybe he's innocent. We'll see. All right, here's the 4-year Bitcoin cycle. So the next halving is expected in 2024. And every one of the halvings we've had before, what do we see? We see these massive collapses in the price of BTC. And that same kind of pattern is unfolding right now. And so it's entirely possible that we are just on the next bottoming process of the third halving cycle here. And we potentially could, on a logarithmic scale, move up to the next scale point for BTC, which that's that number right here, folks, $100,000 per Bitcoin. So based on the logarithmic growth and the halving cycle pain that you get, it suggests, and it's too soon to tell, but it suggests that despite all of this control that Binance has or whatever, all these other facts that we know, it's entirely possible that we end up creating the same price movement as we have in prior cycles. And that could mean BTC 100,000. So kind of cool. This here shows you a little bit more of an illustration in terms of what the halving cycles look like. And then we got to hit ordinals really quick. So these Bitcoin NFTs called ordinals came out, and these right here are where ordinals have been created. So these are creates for ordinals, and it's really interesting that creates for ordinals aligns with the daily transaction count. This is not price here. This is daily transaction count for BTC. So this is not price, but its transaction count seems to be pretty dang aligned with ordinals. So that's pretty interesting. At the same time, the shorting for Bitcoin exchange traded products have actually remained pretty high despite Bitcoin's price rise. So haven't really been squeezed there. The shorts haven't really been squeezed there. So quite interesting. I actually think the biggest takeaway for me out of this whole article is that you can now use buy now, pay later on the programs on Building Your Wealth link down below. Now, just like I don't right now invest in crypto and I don't have any intentions to right now, I think there are plenty of other deals and stocks. I don't recommend you use buy now, pay later services, but so many of you have been asking me to enable that. And I was able to get into a beta, and now 50% of you are using buy now, pay later to join those programs, which I think is sort of like at a grocery store. Like, even though I don't take vitamins, maybe I should. I don't know. Maybe I'm missing something. I don't know. Even though I don't take vitamins, if I was running a grocery store, I'd probably still sell vitamins because, well, you got to make money and survive. So anyway, those are some things to consider. And big bottom line out of all of this, for me, is Binance controls the BTC market a lot more than I expected. A lot. And I don't know how I feel about that because honestly, I don't really trust CZ. I think, when he tells us we've got all this money in Stayfu, I remember tweeting out going, really, where's all the money? It's like half of what you're saying it is. In fairness, he did end up topping it off. I'm not sure if he saw my tweet or other people saw it or somebody else's tweet on it, and they ended up fixing the problem. But they ended up fixing the problem. So good for them, right? They topped off their SAFU fund. But then I don't believe them when they say that all of their assets are backed one-to-one, because I think they're using the same dollars to back multiple different assets one-to-one. Quite frankly, I think they got lucky that BTC didn't go lower than 15,000, because I think if BTC ended up hitting a low of 9, I don't think Binance would have ended up being able to survive the crash. They would have likely collapsed as well. And if Binance represents 80% of trading volumes, that's scary. So in my opinion, that always goes to the bottom line of not your keys, not your crypto. If you don't have your private key, you are going to probably at some point in the future in the crypto world lose your money. So if you want to use the exchanges, go for it. Just get your money out of them. That's my opinion. In non-personalized financial advice terms, not your keys, not your crypto, I think is the biggest lesson out of all of it. And look, there are a lot of people throughout the world, they don't have another choice. They have to use Binance. But at least know potentially what could be pumping up Bitcoin's price here recently could potentially be Binance, ironically making their platform even riskier. I didn't even think it was possible to make Binance even riskier, but that's basically what they're doing. So with that said, let's go on over here to listen to Mike Pompeo, see what he has to say. That's not what I wanted to press. There we go.
You heard what Ron Johnson said earlier in the show. He says we are not at the readiness place that we need to be because of the last couple of years of not only sending money and ammunition elsewhere, but also cutting back on defense.
Well, Senator Johnson has that partly right. I respect him a great deal, but we have a different view. I think it is incredibly important that we push back against what is a Chinese-Russian effort in Ukraine, right? These are deeply connected. They're not separate ideas. His point is right in that we have depleted some of our stockpiles. We need to rebuild them. This is a long time coming in the failure to reinvigorate and rebuild the American industrial base in the way that we need to. But Maria, we can absolutely do this. We have the capacity to rebuild, to rearm, to refit, to build a military that is capable of the singular task, which is deterrence. This is what we did for 4 years. We deterred the Iranians, we deterred the Russians, we deterred the Chinese Communist Party, we deterred Chairman Kim. This happens with a strong military and an industrial base prepared to support it. And I know we can get this back. It's simply a matter of will, focus, and mission.
Can we do this even with this expectation that Joe Biden is compromised? What does the CCP have on him?
Ouch.
Well, I couldn't answer that, and I hope these committees will get to the bottom of it. We've already started to see some of the fund transfers that came to the family, or at least what looks to be receipts for those. Regardless of that, I always look to people's actions. We try to suss out intent. For me, it's what are you doing? The Biden administration is putting all of the wrong things at the forefront of America, and you can see it unraveling. You can see it unraveling for every American family. We are less secure today than we were 2.5 years ago, Maria.
Very, very disturbing. Secretary, stay with us. I want to get your take on Iran. We have new developments this morning with regard to the potential of deeming the Iranians a terrorist organization. Wow. We'll be right back with more from former Secretary of State Mike Pompeo.
So that's actually a big deal. We'll listen into what they have to say about Iran in just a moment, because I want to cover a little bit of what's going on in Iran this morning as well. But I suppose in the meantime, we'll look at a couple questions here. Let me see. I've got quite a few stories this morning here. So we'll go to the Iran one in just a moment, and then we've got to cover some more on the banking crisis. We've got the Inflation Reduction Act, Congress fighting back short sellers for real estate. So this is some of the big topics that we have to cover here. But let's see what kind of comments here. Somebody here writes, don't store your seed in a bank vault as it defeats the purpose. I think that's a not your keys, not your crypto reference there. Weeble doesn't give you keys. That is true. Biden has been on TikTok all weekend while banks burn. Ouch. TikTok. Is that like another China reference? Ay. Let's see here. I have a tiny coffee maker with removable hardware filter, but I put in a paper filter. Doesn't everyone? I thought that was normal. Like you have like the filter that you could take out. That's like the mesh, and then you put the paper in it. I thought that was normal. This more money guy has probably sent me about $20 because he's pumping Algorand. Why you need 5,000 plus algo coins? Algorand will 50x your money. Hey, is that financial advice? Can we sue you if that ends up not being true? Which, I mean, probably won't be true. Oh man. I mean, hey, thanks for the $5, but I don't know. That's some of the things people say in the comments are pretty funny. And then when people pay to pump stuff, it's actually kind of funny too. It's just like, I think everybody should be really aware of this kind of stuff on the internet, right? Like there used to be these people. Who was it? Was it for Terra? It might have been for Luna. No, what was it? There was always this guy who came in and he'd donate like $100. He'd be like, pump this coin, man, pump this coin. Pretty sure it went to 0. Oh, is that supposed to be a diss? Keynesian Kev? I actually believe in a lot of what the Austrian economists believe. I just think they're ahead of the they're too soon. I think the Austrians will end up being right in the long term, and in the short term, the Keynesians will be right, which is actually a very frustrating belief because what I just did basically is I pissed off all the Keynesians and all the Austrians because the Austrians are like, yo, the dollar will collapse today. Inflation will go to the moon. Only gold will survive. And the Keynesians are like, no, inflation is transitory. It's all okay. Oh my gosh. Oh, geez. What? Somebody asked, what's my stance on Bitcoin? Didn't I just spend 30 minutes? I'm pretty sure we just spent 30 minutes discussing that. I see you on Twitch. What's up, Wiser TV? Kevin, if you believe in disinflation and Fed cuts plus money printer coming, why are you not invested into crypto? Because I don't want to trust CZ with 81% market share control of trading volumes. And I think there are excellent value opportunities in stocks that I think will do very, very well. And they don't have a CZ style risk. I can diversify myself into what I think are excellent pricing power stocks with strong fundamentals. With BTC, I get Binance controlling 81% of the flows, and CZ pumping it when he feels like it, and with no audits or risk mitigation. I just don't trust the guy. That's okay. We got to go to Mike.
Mr. Secretary, I want to get your take on Iran. We've spoken over the months about what appears to be this Iran deal now dead in the water. But we've got news here that the U.S. conducted airstrikes in Syria after an Iranian drone killed a U.S. contractor, wounded 5 service members. And now we understand that the State Department says that it would support a decision by the United Kingdom to designate the Iran's Islamic Revolutionary Guard as a terrorist group. I know you spent years trying to get the EU to make this designation.
Maria, we did, and we worked to get the EU and European countries to designate the IRGC as a terrorist organization because they're a terrorist organization in the same way that the Houthis in Yemen are a terrorist organization, and this administration lifted that restriction too. We're about reality. We're about facts on the ground. I hope that everyone will come to understand that Iran is the world's largest state sponsor of terror. They're trying to kill folks in Europe. They're trying to kill folks here in America. They present real risk, as we saw to the American who was killed this week in Syria. If you don't respond with real power, with real force, they will continue to push and they'll continue to create more risk. We know this, Maria. When you are weak, when you sit at the table with the Iranians and try and negotiate a nuclear deal that will guarantee them a nuclear weapon, your friends, Israel, the Gulf Arab states, won't stay with you. They'll hedge their bets. And your adversaries will see that you're weak and they will continue to push. This is deterrence 101. The Biden administration has gotten a failing grade on that.
And you've put together the Abraham Accords, probably the first time in decades that we were even talking about peace in the Middle East. I know at some point you expected the Saudis to join that Abraham Accords as well. Where does that stand?
Well, it still exists. It's working well. The people in those countries know that they are better off. And most importantly, America is better off. The risk that we'll have to send more of our kids to fight and do something really difficult in that region is lower. The more you have peace, the more you have prosperity in the Middle East, the more secure America is as well. There's deep American interest in making sure that happens. And the Abraham Accords were a remarkable outcome of the United States doing hard work to make sure everybody understood that we'd be with Israel, that we would help the Arab states be successful as well, the Gulf Arab states, and that we understood Iran as the problem child in the Middle East.
All right, let's.
All right, we're going to pull off this. I want to give you my thoughts on Iran, which I actually think are a pretty important deal. So let's go ahead and jump into some of my thinking on Iran. Really big deal. So here's just a quick background so you know what just happened in Iran and why Mike Pompeo is on Fox yapping about what just happened. So Iranian-backed militias basically just used drones to attack a U.S. facility. It injured about 6 Americans and killed 1 American contractor. That's devastating. We don't want to hear about American deaths. We really don't want to hear about any deaths worldwide, but certainly American deaths generally require some sort of counterattack. And we did counterattack here. The U.S. accused Iran of backing the attack, so we sent 2 F-15s to bomb sites that were used by allegedly Iranian-backed forces in Syria. After that, because apparently that wasn't enough to actually, deter further attacks on Americans, you ended up having militants fire 10 rockets at a second military base in eastern Syria excuse me, that the United States operates. One of those 10 rockets ended up missing the base by 3 miles. So it probably missed it by feet, but then it just kept traveling. Injured 2 women and 2 children. So it shows you the militants who are attacking these American bases just don't care about America responding. And that made me wonder why. Why would militants actually shoot rockets at America? Wouldn't we turn around and absolutely level them for that? Well, apparently, no. See, American retreat actually has more serious consequences in what happens in a region because it leaves a power vacuum. And when we retreated out of Afghanistan, we actually told the world, and we left the power vacuum that we did, we told the world, you know what, we're just not going to get involved. Now, this video isn't to say whether we should or should not have retreated from Afghanistan. After all, it was a 20-year, very expensive war, and the Afghans didn't want us there. But what's important is that what happens after a power, a hegemon, leaves a region? Well, you have something known as a power vacuum. A good way to think about a power vacuum is like a black hole. So think about a really powerful star, like a sun. It's really strong and really powerful. And when you look at it, you're like, oh man, it's strong. Like, I don't want to attack that star because it's way more powerful than me. America, in this case, being the star. Well, when that star collapses or goes away in a region, it actually creates a black hole that sucks everything into the void that it left. Well, that's exactly what happens with hegemonic power, regional power players as well. When one party leaves, the next strongest party players leave or enter and fill the void. Leaving Afghanistan was basically like a bat signal screaming, don't worry, Biden's no longer going to get involved in other international affairs. We're just going to leave a power vacuum. So what happened in Afghanistan? The Taliban took over within days. That is everything that we established, the military equipment, tanks, Humvees, ammunition that we left behind are now all controlled by the Taliban, a clear terrorist organization that hates Americans. So the Wall Street Journal editorial board actually takes this one step further, and they suggest that Biden's position of leaving power vacuums and not responding to aggression actually opened the door to Putin invading Ukraine. Now, people on the left say that's ridiculous. Putin would have invaded Ukraine anyway. People on the right say, wrong. If we still had Donald Trump, Putin would have never invaded Ukraine because Putin either A, respected, or B, feared Trump. Now, Iranian-backed militants are testing our military. Listen to this. Out of 78 attacks on our military, Guess how many times the United States has officially responded to attacks against our American heroes in the Middle East? Seriously, think about that for a moment, okay? Think about what I just asked you. Out of 78 times, okay? 78 times since 2021, since we left Afghanistan, 78 times. How many times that we've been attacked have we actually responded? 100? 78? 70? No, folks. Under the Biden administration, we have responded 3 times. That's it. We've been attacked 78 times in the last 2 years since we've left Afghanistan, so a little less than 2 years. We've been attacked 78 times, and we've responded 3 times. Insurgents don't care. They think we are a joke. This is embarrassing to our military. It's an insult to the heroes fighting for our freedom. It's like sending our army into the Middle East to create stability where they are. They're not actually really occupying and creating stability. The contractors and servicemen and women that we have in the Middle East are fighting insurgency, at least, and exercising missions. They're not pulling a Vietnam or Afghanistan. They're fighting insurgency. At least so we're told. But anyway, the militias in Syria do not seem to care because they basically see our military as saying, don't worry, just ignore it. We don't want the politics of us getting involved too much being an issue right now. And to me, that's really embarrassing. That's an embarrassing side of being an American because I think America is exceptional. And it's important to remember that Iran is a nuclear power. They are supplying suicide drones to Russia. Iran arms militants in the region, specifically Houthi rebels who attack Saudi Arabia. And what do we say to the Saudis? We just can't really help as much as we used to. So what a surprise then that the Saudis are starting to distance themselves from America, now using the Chinese yuan for some oil contracts. The Saudis are losing respect for America because we're not helping the region in a way that we used to. In fact, we're letting militants fire rockets at our bases, and we're not even responding. This is disgraceful, especially when Iran is flagrantly violating the treaties that we have with them. Consider the following. In Iran, you have enrichment limitations set by agreement with the IAEA, that is the International Atomic Energy Agency. And in a recent inspection in Iran, they found traces of uranium that were way too pure for civilian use. That restricted level, by the way, is 60% purity. Anything above 60% pure uranium starts getting close to the threshold to actually make a nuclear bomb. That level is 90%. And the IAEA found uranium sitting at 83.7% enriched in Iran. And that's only what they found because the IAEA doesn't get invited everywhere within Iran. So this really implies that Iran is still working on enriching nuclear-grade uranium. At the same time, Iran is actually becoming more of a power player in the region. And this is also very concerning because really, they're a state sponsor of terrorism. Look at this particular chart that I'm going to show you right here. It's not working. Input select. There we go. Look at this chart. What does this chart show you? It shows you the International North-South Transport Corridor. So the usual way to get goods and services from India up to Europe or Russia would actually be, I should not put myself there. Let's put myself there. No, that's not the right screen. Sorry, I'm using a new switchboard here and screwing it up. I'll just hide for a sec. Anyway, the usual way to get goods to Russia would be around this way because you would avoid going through Iran from India. Well, that's a substantially longer way than just going through Iran. And so now all of a sudden, Iran is becoming a more powerful player in the region by actually enabling substantial trade through what's known as the International North-South Transport Corridor. That project is also going to benefit substantially from now improved relations between Saudi Arabia and Iran, because even though Iran has been arming Houthis who have attacked Saudi Arabia realizes that Iran is a power player in the region. And ultimately, what we have to do is recognize that crap. If the United States is going to help the region less, and they're not even going to respond to threats, then maybe Saudi Arabia has to align with people in the region, like Iran. Now, Iranian infrastructure remains a major obstacle for these trade routes actually reaching their full potential. Much of these transit areas rely on roads that are really crappy and railways that are terrible. You think our railways are bad in America? Just look at them over there. They're even worse. But the point is, China, Saudi Arabia, Iran, and Russia are all getting stronger. And at the same time, people make the argument that America is getting weaker, that we're getting pushed out of control in the Middle East, and that this is dangerous for the United States long term. After all, China was the mediator in negotiating a deal between Saudi Arabia and Iran. Remember, Iran used to attack Saudi Arabia, and now China is negotiating deals for them too. It's the first restoration of diplomacy in 7 years. Iran just signed a 25-year partnership with China as well. And the goal is basically telling the United States, we don't need you. China, it gets discounted oil. Iran gets investments from China, although the trade balance is a little uneven. China is getting more of a benefit than Iran is. Russia is now Iran's largest investor. You've got pretty weak economies overall. The United States still dominates from an economic point of view, but our 900 soldiers in Syria and 2,500 soldiers in Iraq battling the remnant ISIS are really getting no support from our politicians. So the question now is our deterrence in the Middle East too weak? Is our presidency too weak? Should we be tougher? And the question then is, well, if Iran is enriching nuclear weapons, does it make sense to potentially attack Iran and bomb these nuclear weapons enriching facilities? Maybe, but does that then just embolden Iran to actually just dig deeper and build their bunkers even deeper out of the range of bombs and continue enriching nuclear weapons? It's entirely possible. It's basically like a North Korea over there. So bombing isn't a great tool. Usually the good tool was trying to be a regional power player where you strike deals with all the countries around Iran to limit the power of Iran. I mean, consider it. Deals with Turkey, Saudi Arabia, deals with Israel, of course. Being in Afghanistan or Iraq gave the United States a lot of power around Iran. Now we're pretty much gone out of all of these areas. We can't even respond to but 3 out of 78 attacks against Americans. So it's no surprise that Iran is becoming a larger power player and is partnering with Russia and China, which is scary in the long term. Now, practically, how does this affect us as Americans, sort of in our daily lives? Well, little now, but it's going to become very important for future presidential elections because the stronger Russia becomes, the stronger China becomes, and the stronger Iran becomes, the weaker relatively the United States becomes. So long term, it's actually a serious issue that we should be paying attention to. And hopefully it motivates you to check out the links down below for the programs on building your wealth so you can make sure you become a millionaire by building your wealth as fast as possible by investing in real estate in the next real estate crash. Check out the 0 to Millionaire Real Estate Investing Program. Check out the Buy Now, Pay Later services for those as well, linked down below. Check out the Stocks and Psychology and Money group. Then the sponsors, metkevin.com/life and metkevin.com/free to get yourself 12 free stocks and life insurance in as little as 5 minutes. Okie dokie. That gives us our topic on Iran. All right. Fun. Not really. Kind of stinky. All right. So we did crypto. All right. We've covered this. Covered this. There's a lot of good ones today. All right. Got to talk about banking. But first, let's do a couple questions here. A little bit of Q&A. I'm going to take a sip of coffee in the meantime. So Q&A, and then we're going to talk banking crisis. Real men buy oil. No. No, don't do that. I still think oil is going down. Everybody's like, oil's going to 100. I'm like, no, it's definitely not. Yeah, it's like 69 right now in WTI. Anyway, I run my own think tank. I love that. The kitty looks good. Thank you. Appreciate that. How do we short the banking ETFs? We're going to talk about the banks in a moment. Video sponsors, the Feds. Ooh, are you calling me a Fed boy? Is that a compliment? Fed boys are kind of, you know. Anyway. You mean real estate isn't crashing yet? We'll see. We'll see. Real estate's going to be really interesting. Mortgage spreads have skyrocketed. We'll talk about that in a moment. But mortgage spreads have skyrocketed. So mortgage rates actually haven't fallen with the 10-year Treasury. Now, as long as those spreads come down pretty rapidly, if the banking crisis goes away, we'll do pretty good. I think then you'll get a nice little floor under the real estate market. So that'll be cool. I actually have been short the dollar, or I was short the dollar for a while because I don't actually think I think the more treasury yields go down, the more the dollar will fall. I never trusted the banks. I like my cash in my own possession. I don't know, man. I don't think that's a really good idea. Yeah. What's your thought on VWAGI, a small holding in addition to Tesla? You know, if it's a small cap stock, I don't touch it, man. Those things are just pure manipulation. What is this? VWAGI. Oh, it's Volkswagen. Volkswagen. What is that? Unsponsored represent. What is that crap? ADR. I don't know what that is. Is that Volkswagen? That's the ticker for Volkswagen? I mean, I've never looked at them. That's actually really interesting. I can't believe. I thought that was like some small cap ticker. That's crazy. Who picks a ticker like that? That's trash. I don't know. I've never looked at the financials for Volkswagen. I think their EV. It'd be very interesting. I mean, let's look at it. VWAGI Investor Relations. Let's look at it really quick. VWAGI Investor Relations. A dumb ticker. Like, what about who has VW? VW stock. Just shows VWAGI. So nobody has VW? That's funny. Somebody could steal it. Somebody could squat on it. All right. Let's see. Why Volkswagen? Let's see. Oh, that's funny. When you download the investor relations page for Volkswagen, you get AMC Volkswagen Group. Don't know why. Oh my God. Give me the documents, you idiots. It is so hard to get the financials for this company. Company report, annual report. Got it. I think I'm on like the 7th page of clicking through here. Oh my God. Anyway, I'll keep answering some questions. We will go to war before we lose the petrodollar. I don't think so. Petrodollar is not even that important relative to other uses of the dollar. What do you think will happen? And quite frankly, I think the usage of just oil in general will go away. What do you think will happen to the stock market and real estate market at the end of this year in a nutshell? Well, I make videos on like my opinions on this literally every day. And people are like, can you just give me the short scoop? Like, there's so many ifs, I mean, it's always been my thesis. Well, at least for the last 6 months on the Nike swoosh, that the stock market goes down harsh. Nike swooshes up with a lot of volatility, but trends up. And that real estate will bottom after stocks do. But it depends, man. It totally depends. Depends what rates do. I think I get asked like daily, and it's just like annoying at this point. People say, so when's House Hack going to buy real estate? How many times and how many House Hack videos have I said Q3, Q4, but depending on what happens with rates? It's like, I don't know, man. Just you have to go day by day. Like, I don't think you could study the news and just go, just give me the bottom line. That's like when you get those people want you to sign up for like those email lists where they just give you they just read you the headlines. of like, oh, here are the headlines that you need to know today, and you only need to spend 1 minute reading it. And I'm like, are you trying to make me stupid? Like, all that happens when you read a headline is you tend to have some kind of emotional response to it. And then you have no logic or perspective behind that. So if somebody asks you about it, you're just like, oh, did you hear this happen? No, what happened? Oh, I don't know. I only read the headline. Like, you don't want to be in that position. After all of that time, the 500-page Volkswagen report has finally downloaded. What the hell do you need 500 pages for? Oh, all right. Let's try this. Oh, this thing sucks. There we go. So what do we got over here? 2022 millions. All right. So we got 279 billion euros of revenue divided by 227. 227 divided by 279. That gives them about an 18.7% gross margin. It's no Tesla, but it's pretty good. Then you got distribution expenses. I don't even know what that is. Shouldn't that be part of COGS? Okay. Admin expenses. Other operating income. That's fine. Could be finance income. Operating results. 22 billies. That gives us an EPS of about 29 euro per ordinary share. Well, how much are these shares trading for in Europe? And what percent of the ADR zone? That's the complicated thing. But that's interesting. That's actually a decent margin that they have. Their gross margin, not that bad. Here's their balance sheet. Let's look at cash flows. Changes in equity. Cash flow statement. Okay. I'm surprised they didn't start with their net income. This is like the European way to do it, huh? Change in loans, security, cash flows from operating activities. Here we go. $28.4 billion. It's pretty good. And earnings. Oh, there it is. Earnings before tax. Oh, that's funny how they do that. Investments into intangibles, property and equipment. So they got free cash flow of around 15-ish billions in euro. It's pretty good. Cash and cash equivalents. They got another 29 billions in cash, but how much debt do they have? That would be interesting too. Current liabilities. Oh my Lord. There's so many liabilities. Where do I even start? Oh, intangibles don't matter. Plant property, any currents. So let's try to do some quick Kevin math here on this, and then we're going to go to the next segment. So some quick Kevin math here is cash 29.1 plus 37.2. And then they have inventories, trade receivables. I mean, I'll give them that. Okay. So I'll give them 84 of cash, basically. 84 Kevin cash, we'll call it. And then in liabilities, we have tons of long terms here. Financial liabilities, 121 billion. My gosh, how much do they pay in interest? Other liabilities. I mean, that's basically like 150 right there. And provision for pensions. Oh, God. You know, that's something Tesla doesn't have is the pensions. So you've got about 181. Yeah, I'll just take off the 21. I don't know what this other is. Whatever. We could just take the total line that they gave us. $203 billion. Golly, that's a lot in long-term liabilities. And then in short-term liabilities, you've got 182, but I could add back in. Do they have any leases over here? That doesn't matter. It doesn't matter. Yeah, pretty much all of those. 182 in current liabilities and 84 in current assets. That doesn't look good. They got debt like crazy. So yeah, they make money, but boy, oh boy. I mean, their money hopefully just goes to debt pay down because I think that's all they're going to end up doing. Let's see here. Dividends paid. Wow. Okay. They actually paid $4 billion of dividends. capital transactions, proceeds from issuance of bonds. Here they're taking on more debt, but then they did pay off that debt, so those wash. Wow. This is an interesting company. You know, they have a profit margin on their cars. They clearly sell a lot of cars. They have got a good brand value, but they've got an insane amount of debt. And really to go deeper on this company, you'd have to know all of the different controlling companies in this. And how does that relate to the ADRs out here? The American Depository shares, essentially. I don't know the answer to all of that. I don't know. For me, it's not something that I feel anywhere close to touching. Interest expenses, 442 mil. I'm surprised that's not actually more. $442 million a year in interest expenses. That means Volkswagen is paying $1.2 million a day in interest. Wow. That's a lot. Write that down. All right. Very interesting. Volkswagen. Yeah. All right. So let's go to the next topic. Next topic is the banking crisis. If I could just figure out how to make this not be funky though, because it just keeps this so annoying. Video assign, HDMI out. That's what I want. It's not that hard. That goes here. Thank goodness. Maybe I have to do the scene memory. Let's try that. Let's save to 1. Save. Let's see if that worked. If that worked, I'll be very happy. That's my note on the next one. That's that. That's that. Oh, I took my phone away. No, it doesn't work. Dang it. All right. Give me a sec. I'll get to the bottom of it. It's very annoying. That here. I don't know why that just doesn't stay that way. All right. Okay. Oh, what's this? No. Ooh, I think I may have figured it out. Ooh, that would make me very happy. All right, well, I'm not going to test it right now. Anyway, so now let's talk about them banks. Okay. Oh, I got a lot of notes here to cover. All right. So the first thing we're going to do is we're going to touch on the Swiss banks, a little bit on rich versus poor. Then I want to talk about First Republic, Deutsche Bank, Credit Suisse, A1Ts. That's what we're going to do. All right. Stand by for Kevin yapping. Okay. All right, here we go. Push the button. Hey everyone, me Kevin here. We gotta talk about the craziness of the Swiss banking system. What the heck the differences are between Credit Suisse and Deutsche Bank, because they're a pretty big deal. A lot of people freaking out right now saying that's it. Deutsche Bank is the next shoe to drop. In fact, we saw their credit default swaps skyrocket to levels that started reminding us of the 2008 financial crisis. But even recently, we've been at levels at such spiked levels of credit default swaps in October, leading to the thought that the stress is about to explode even further, and the shoe will finally drop, being the next domino to fall. First, it was Archegos. Then it was Three Arrows Capital. Then it was Terra Luna. Then it was brokerages like BlockFi and FTX and Voyager Digital, along with others. Then came Signature Bank and Silicon Valley Bank and Silvergate. two of those having massive crypto exposure, being massive crypto on-ramps, and one of them being a massive setup for startups in Silicon Valley. Basically, people with a lot of wealth using these particular banks. And guess what happened? These banks got bailed out by our government because, after all, that's what our government does. It bails out the rich people banks. And therefore, it's no surprise that Credit Suisse was essentially also bailed out on behalf of rich people. Remember the old saying, get a Swiss bank account or a Swiss bank account? The reason for that was because back in the day, you actually used to be able to make money, have that money wired to your Swiss bank account. And the Swiss would just be like, we don't know where your money came from, but we don't care. We are just grateful to have you as customer here. Thank you very much. Danke. And the idea is, hey, if you don't deposit it into a U.S. bank, how's the U.S. going to know to tax it? Now, some of those loopholes have since been closed. The Internal Revenue Service, for example, has a deal that requires Swiss banks to report American deposits in their banks. So that way the I, the A, and the S can tax you and make sure they get their money. But isn't it interesting that it always seems like the rich people banks are the ones that get bailed out compared to poor people? Consider this. In America, guess who pays most of the overdraft fees in America? Is it the top 10%, the top 50%, the bottom 50%? No, folks. In America, the vast majority of all overdraft fees, according to a Princeton sociologist interviewed by Bloomberg, is paid for by the bottom 9% of account holders. Poor people pay all the fees. Rich people don't pay all the fees and get bailed out. The reason for that is simple. Rich people have a choice with where to put their money. For poor people, it's actually surprisingly difficult to continue to move bank accounts. You have to come in to schedule a wire, pay wire fees, pay overdraft fees, bank account fees. It's insane. Rich people get a personal banker who they can call up on their cell phone and go, yo, I need to send a $250K wire here, there, or whatever. And it's done immediately for free. Poor people want to cancel a credit card. They get sent to the retention department and they have to spend an hour on the phone to cancel a credit card. Rich people send a one-line email to their personal banker and it's considered done. There are big differences between the rich and the poor America. There are also big differences between Credit Suisse and Deutsche Bank. And quite frankly, it's not just America where you have these differences. It's quite frankly the entire world. Now, some people get mad at me for suggesting that, oh, how could you call it a bailout? That Signature Valley Bank got bailed out. It wasn't a bailout. Yes, it was. The Federal Reserve created the BTFP facility. That facility enabled liquidity for Silicon Valley Bank that it would otherwise have not gotten for its toxic assets in the free market. That liquidity is a loan. If that loan doesn't get paid back, who is guaranteeing it? Not the Fed. It's taxpayers, because it's backstopped by Treasury appropriations, which come from Congress, which come from you, the taxpayer. So yes, the taxpayer is guaranteeing. You basically signed on the deposits at Silicon Valley Bank and the other sectors of the banking sector. Now, many make the argument that, but come on, Kevin, these were systemically important. I mean, if they would have collapsed, then the entire system could have experienced contagion. Really? Then why weren't they called systemically important from day one? Oh, because regulation that was loosened during the Trump administration in 2018, which actually passed as a bipartisan measure. The only people voting against it were the furthest on the left, the more progressive Democrats. And that loosened regulation for banks. And so that's how we ended up where we are now, where basically taxpayers and poorer folks are once again bailing out richer folks. So how is this also happening in Switzerland? Well, the failure of Credit Suisse is not just unique because Credit Suisse was, after all, pretty toxic with all the scandals that it had, but Switzerland and its banking economy is basically everything Switzerland stands for. Switzerland's banking system is 5 times the size of its GDP. Its banking system is the Swiss identity. bankers literally live in mansions around Zurich, around Lake Zurich. And they go into town to buy fancy watches and fancy stuff because banking is synonymous with Switzerland. Back in the 1700s, it was actually a crime to disclose the details of an aristocrat who banked at Swiss banks. Listen to this. Adolf Hitler, where do you think he put his money when his book sales took off for his book, Mein Kampf? Swiss bank account. You can't make this stuff up. Swiss banking exceptionalism, especially for rich people, goes hundreds of years back. Hundreds of years back. And so it's incredible to see Credit Suisse fall and then at the same time basically see taxpayers in Switzerland, just like in America, backstop the failure of their rich people bank. But wait a minute, I thought UBS is taking losses on the deal. UBS agreed to buy Credit Suisse for about 81 cents a share. Now, they are agreeing at that purchase price to take about $9 billion of fixer-upper costs. So they already know what their cost is. Acquisition price plus fixer-upper. It's kind of like buying a broken house. My price plus my fix-up. That's already factored in for UBS. Guess who's backstopping the next $15 billion in losses? The Swiss taxpayer. In other words, if losses at Credit Suisse end up exceeding the fixer-upper budget, think of the house analogy. If the budget goes above and beyond, the taxpayer pays. Imagine this. You're a rich person. You buy a mansion. You literally buy a mansion. And you're like, my budget to fix this place up is 200 grand. And the government says, if you go over budget, we'll bail you out. That's literally what is happening. And they're doing this under the argument that, well, if the Swiss bank collapses, then that'll not only destroy potentially our national identity, but it'll be systemically bad. Maybe that may be true, but it's still important to know that basically a rich person is buying a mansion that's a fixer-upper, and the government is guaranteeing them above their fixer-upper budget. And that fixer-upper budget is $9 billion, and the government is saying, our taxpayers, I don't know why I'm doing that, our taxpayers will bail you out to the tune of an additional $15 billion if there are additional losses. So rightfully so, this is leading a lot of other people to wonder, okay, who's next? And that's why eyes are on Deutsche Bank. And it's important that we compare a little bit of Deutsche Bank to Credit Suisse, because the Germans are at least a few hundred miles apart from Switzerland. So it's worth talking about some of the differences. But of course, if you like this kind of perspective, imagine the perspective you could get on building your wealth in the programs on building your wealth down below. Most popular course, Zero to Millionaire Real Estate Investing, combined with the Stocks and Psychology of Money Group. You get lifetime access to all the new content, the existing content, the live stream archive, all of the fundamental analysis live streams and archives on real estate or stocks. I mean, you're probably getting 600 different live stream archives of real estate or stock analysis. This is phenomenal content, plus the actual custom created lectures. So check out those programs linked down below. You won't regret it. It's a phenomenal way to get perspective on investing. Now, what about Deutsche Bank versus Credit Suisse? Well, this gets interesting. So let's hop on over to Credit Suisse's last financial statement before they ended up going kaput and oopsie doopsies. And if we look at their last oopsie doopsie report, you could actually see that things just ain't that fantastic. So look at this. Credit Suisse's net revenues have actually been plummeting since the end of 2021, as reported in this document here. You could see that in 2021, net revenues at Credit Suisse were about $22.7 billion, which fell by nearly a third to just under $15 billion. Actually fell by 34%, so just over a third. And then the quarterly revenues have actually been suffering even more. Look at just this fall from Q3 22 to Q4 2022. Yikes. That's a big oopsie doopsie. The revenues are plummeting. But not only are revenues plummeting at Credit Suisse, or were, since obviously they failed and were bailed out, not only were revenues plummeting, but look at this. Their losses have been mounting. They lost $600 million this is in millions. Yeah, wow, oh my Lord. They lost $600 million at the end of 2021. They lost $3.2 billion at the end of 2022. Then they lost $1.3 billion just in the fourth quarter alone of Q4. So you can look at this company and go, dang, this company's absolutely been getting reamed. Absolutely been getting reamed. How does this company end up comparing to Deutsche Bank? Well, first, it's worth noting that this company was trading for a book value per share of about tangible book value per share. You could say that takes out the intangibles of about $10.60 per share. In January of 2022, this was trading for about $10.55. Obviously, now it's trading for about 80 to 90 cents. That's because that's what it's getting bought out for because it failed. But this gives you a heads up of how ugly the actual earnings report looked for Deutsche Bank. And all we did was look at one page of the earnings report. Now, all we're going to do, which makes it sound kind of lazy, but all we're going to do is look at the earnings report for Deutsche Bank. And we'll look at the same one page, essentially, for Deutsche Bank. That is not it. It is right over here. We're going to look at the same report for this company. And if any of this makes you nervous, get life insurance in as little as 5 minutes by going to metkevin.com/life and 12 free stocks by going to metkevin.com/Webull. Keep in mind, those are sponsored, which means I make money if you sign up for those, but it is okay for people to make money. Remember, if you have that feeling of like, why do I want somebody else to make money? What? You get wonderful free information and perspective over here, and you can get quality products that I use on a daily basis, whether that's Webull, which I got right here on screen, or it's life insurance, which I also use. Well, I mean, I haven't used it yet, but I pay for it on a monthly basis. Knock on wood. But anyway, so let's look at the revenues for Deutsche Bank. What do we have? In 2020, fiscal year net revenues, 24 billion, 21, 25 billion, 22, 27 billion. What do you notice? It's growing. 7% growth, growth over here, growth over here. You're growing. So that's fantastic. You actually have growing revenues at the bank. Great. Growing net revenues. Fantastic. How about their profits? Well, they had a $600 million profit in 2020. They had a $2.5 billion profit in 2021. And then a $5.7 billion profit in 2022. So you actually have a profitable company where revenues are going up. So for a moment, compare Credit Suisse and Deutsche Bank. Revenues increasing versus decreasing. Income increasing versus decreasing. Deutsche Bank, January, around that same January time I showed you for Credit Suisse, was trading for about $14. Now it's trading for $9.35. The book value for Deutsche Bank is sitting right now at about 29 euros. So you're actually trading at a discount to book right now of almost threefold. How crazy is that? So the book value, the tangible book value, well, let's look at tangible. Tangible book value per share, which is the one below it, is 26.7 euros per share. It's trading for $9.35. You are getting Deutsche Bank right now at 1/3 on assets, which basically means its assets are written down 67%. So as long as their assets fall less than 67%, maybe Deutsche Bank is actually a buy. How weird is that? So then, if you compare to JP Morgan, whom, which company is basically deemed way too big to fail, what do you have over here? Well, JP Morgan is right now trading for $124.91. That's down from $143 recently and up from $101 as a low in October. But its book value is sitting around $90 per share. So you can see JP Morgan is trading at a premium of book value, whereas Deutsche Bank is trading at a discount of about 67% on book value. How crazy is that? That's pretty cool. Now, that actually seems like a potential opportunity to buy the dip on Deutsche Bank. Now, I personally have a rule not to buy anything related to financials in a recession. It's a rule I have. Now, can rules be broken? Can you flip-flop? Of course. Do I have any intention on flip-flopping on the banks right now? No. I personally like to stay away from financials. However, does that discount look pretty damn juicy? And are the fundamentals, at least from what we've seen, relatively different from what we've seen with Credit Suisse? Yeah. I mean, a 67% discount on Deutsche Bank, where the revenues are going up and the profit is going up. Hot damn, that looks juicy. So what happened with those credit default swaps? Well, even though credit default swap pricing skyrocketed on Friday because of fears that maybe Deutsche Bank would also fall, the credit default swap market is really illiquid. So it's super volatile. And pricing for those CDSs actually already calmed by the close on Friday. So maybe the fears that Deutsche Bank will fall are actually fundamentally overblown. You should probably have more concern over smaller banks, maybe like a First Republic, because after all, that one right now is still presently being determined if, well, basically First Republic is going to end up getting bailed out by the government, and there are fears that a bank run could be underway. Now, who knows? After all, Jerome Powell and Secretary Yellen have told us, hey, don't worry, everything is basically guaranteed. Of course, they've had to walk back those comments and clarify that, well, only if you're systemically important. Okay, well, what's systemically important? Well, it's whatever we feel like is systemically important. And it's very jaded, but I mean, you hate to look at it and just say like, so where the rich people are, eh? Again, jaded, but it just seems to be consistently that case. So, bottom line, could the banking crisis continue? Absolutely. But is it possible that the banking crisis ends? And if so, and more importantly, why? Well, the answer is yes. The banking crisis could end, could be over. And the more interesting factor there is not saying, yes, things could get worse or things could get better. What's more interesting is actually thinking, wait a minute, why? Well, maybe Signature Bank and Silvergate failed because of their exposure to a very niche industry, and that is crypto on and off ramps, which basically have been closed. Even Paxos is getting sued, right? Now it's basically just like Binance is the only player left. We did a segment where we talked about how Binance controls 81% of the trading volume market for Bitcoin. They basically run Bitcoin. They can pump it or dump it however they want. They have complete control. So if you trust CZ, great. You're safe with Bitcoin. And this is not to bag on Bitcoin. It's just to say that maybe the crypto banks were meant to go under because crypto went through hell. Maybe Signature Valley Bank was meant to go under because massively unprofitable startups don't deserve to survive in a recession. Go figure out how to make some money. Stop burning so much damn cash. Learn how to run a cash flow statement. Learn how to actually run a startup. That's what we're doing at House Hack. Which, by the way, if you're an accredited investor, that round closes in 5 days, March 31st. You can learn more about that by going to househack.com. But anyway, so is it possible that Credit Suisse failed because its revenues were going down, its profits were declining, and it was known as being a very risky bank? Yes. So is it then not entirely possible that this banking crisis is really just a crisis of the riskiest banks failing and everything else maybe will be just fine? Yes, that's entirely possible. Now, some people have been begging me to look at First Republic in the comments. Fine, I'll oblige because that's what I do. I don't know why, but I don't know, I get enjoyment out of this. So what do we get? So this is First Republic. Let's just look. Let's make this really simple. Let's look at their cash flow statement, okay? So what are the cash flows at First Republic? Well, first things first, net income increasing. Good. That's fantastic. A billy, 1.4 billy, 1.6 billy. That's really good. Is that? Yeah, that's in millions. Wow. $1.6 billion of net income for First Republic. Hot damn. That's actually pretty dang good. What do you got over here? Net cash provided by operating activities. This is starting to go down a little bit here. Why? Where's their money going? Net change in assets right here. These are people withdrawing money potentially by the end of the year. So they're definitely seeing money go down, net change in other assets. I'm not sure, but we'll have to see. It could be markdowns on available. No, but that's not. I mean, yeah, I guess that could be. Those could be losses. Net change in other assets could be losses on their available for sale securities, which they're adding back in basically to their net change in other assets, but they're not adding them back into their cash flows. They're subtracting them. So these have to be other expenses then. I wonder where they're coming from. Let's look at these. Hold on a sec. Where are these expenses going? So non-interest expenses, other expense, we'll have to look at the footnotes. Information systems, occupancy, professional fees. I mean, there's so much here. This is my first 30 seconds looking at this bank. I really don't care so much. What I care about is what's the net operating cash is this. Okay. Yeah. So net increase or decrease in cash equivalents at the end of the period. Look at this. This is where you're starting to see some of that stress. Last year they had about $13 billion in cash. The year before that, they had about $5.1 billion in cash. Right now, they've got about $4.3 billion in cash. They still got a good amount of cash here, so that's pretty good. And it looks like they're financing to take a lot of that. Here's a net change in deposits at the end of the quarter. Here's deposits. There we go. Here's 20 bill that came in. That's about half as many deposits came in this Q4. Is this for the year? This year in 2022 than did the prior year. Less deposits came in 2022 than came in 2020. They actually are borrowing money. Look at this. They've borrowed short-term and long-term debt of about 10 billion right here. So they are taking more money out. And then now look at this. That's interesting too. Proceeds from the FHLB and then purchases of FHLB stock and other investments. Okay, that's fine. So they borrowed some money here from the FHLB. We know they're one of the big top 10 borrowers at the end of the quarter from the FHLB, which is one of the reasons, by the way, people are flagging them as like potentially needing some more cash. But you can see really what's happened here is their deposits have halved. And I wonder how the deposits are going to be for this year. I mean, this number is probably negative already for this year. So you're going to have to borrow more money from the FHLB. They'll have to probably liquidate some of the stock potential investments that they've made. Dividends. They actually paid dividends on preferred and common stocks. That's probably got to go. They repaid some of their long-term debt, 500 mil, but they took 3.6 bill out. So that's an offset. That's more borrowing on net. And let's see here. These are investing proceeds from sales and pay downs of available for sale. So they got about 500 mil in cash from selling securities. And then they're held to maturities. It looks like they actually put some more into held to maturities, which is a nice way to hide losses. But anyway, it seems like if I had to sort of put a gauge on it, it seems somewhat in the middle of the road, right? Like it doesn't seem toxic like Credit Suisse. It doesn't seem as robust as Deutsche Bank, but it potentially could be slightly unfairly targeted in this whole banking crisis because, I mean, they probably shouldn't have borrowed from the FHLB. I think that's why they ended up getting sort of this bat signal go up. That's like, uh-oh, that's it. Because as soon as you borrow from them, it becomes public and then you go on this list. And you don't want to be on that list. The list, I'll show it to you. The list is FHLB. This is the list that we talked about yesterday. Here are the top borrowers from FHLB members. WAMU, Countrywide, Merrill Lynch, Wachovia. They obviously went bankrupt or got absorbed. Then you have current top borrowers. Oh, that's the TV. Wrong button. Current top borrowers. And there they are. They're the second one. They're right under Silicon Valley Bank in terms of Q4. So kind of crazy. And it should definitely encourage you to get life insurance in as little as 5 minutes. Make sure to get 12 free stocks via mettkevin.com/Webull or mettkevin.com/free, actually, I think it is. And make sure to check out the programs on Building Your Health, link down below. Is that working? I think it's working. I hope it's working. I just pushed the button. So anyway, bottom line out of all of this, maybe just the riskiest banks are the ones that are going bankrupt. Credit Suisse was a complete disaster. The crypto-related ones and the startup-related ones, totally explainable. We could totally explain that away. Only hindsight will tell in the future, though. So we'll have to see. Anyway, good luck. And good part of the song. I gotta work on that. Oh, dear. All right, let's go. Next. All right, next up. What's the next topic? What's next? No. What's next? What should we cover next? Oh, there's nothing on TV. This is boring. Kashkari just talked and said nothing. Where did he do that? Where did he just talk? Let's see where did Kashkari just talk? Kashkari, talk more about house hack. What do you want to know about house hack? House hack's freaking awesome. Reg A, we're thinking hopefully May or June if the SEC likes us. You got to respect the authorities. I think they have a tough job, man. I don't think I could do it. I think they are in such a rock and a hard place. CBS Face the Nation. I thought he was going to be there, man. He's always on. It's always Face the Nation that gets the power interviews, man. Why doesn't J Powell go on there, though? CBS Face the Nation. Let's see if we can find it. When retail, I just said that. The non-accredited. May or June. I'm trying. I'm working really hard on it, by the way. We are. It seems like every time I'm with the team, we find even better opportunities, and it's so really incredible. And no guarantees, obviously. You know, I can't guarantee anything, but we're so excited. We were just on the plane. We're flying to Texas and Atlanta, looking at properties, and Charlotte. We did Fort Worth, Atlanta, Charlotte. Anyway, that was interesting. Yeah, we had some really cool ideas in terms of how we can make sure to maximize our equity for the company at House Hack in our real estate deals in terms of which markets, how to balance debt in the future when rates come down, because we're going to be able to buy cash. Not a lot of cash buyers out there right now, so pretty excited about that. All right, let me see. CBS. Somebody says building a team this size isn't easy, no doubt. Yeah, the nice thing is I've done every level of this business over and over and over again. So like I can fill in any job. I'm highly confident of that. Not that I want to, because I feel like I already work enough, but I will if I need to. So that gives me a lot of peace. You know, the last thing you want is like one person leaves and then you don't know how to fill that person's role, right? Because you don't even know. Like that's bad. That's why I always admired the CEOs who would like kind of like an undercover boss where you go bag groceries for a day and like you actually see what it's like on the line or on the floor. I think companies start failing when the CEOs get disconnected from what's actually happening on the floor. That's my take. I don't think I'm going to get this Face the Nation vid yet. That's all right. It'll come up later. Best way to get your real estate license? You just Google real estate licensing. Why is everyone so focused on fighting inflation via Fed rate hikes rather than slowing down government spending? Yeah, no kidding. Actually, that's perfect for our next topic. Thanks, Matt. It's a good one. What about SoFi? They have an arena similar to a big crypto company that spontaneously got a name on the arena. Is spending like $500 million on naming rights like all of a sudden a bragging right? I mean, I guess it is. But I think it's like kind of ridiculous marketing. Like, do people actually use the bank because their name is on a stadium? Or is that a bragging right? Like, whoa, you should use SoFi. Why? Their name's on a stadium. I don't know. Anyway, I've covered SoFi so many times. I think in the course member live streams, we've done SoFi like 17 times. Okay, so let's go into the Gov Spending one. Oh, yeah. I'm going to make a note, though. Let's All right. Any other last minute questions before we go on to the next thing? Chicago. Ooh. All right. Let's talk about that Gov spending. I like that idea. All right. Where is my Gov spending piece? Gov spending. This was a great one. This was in the Wall Street Journal. This was fantastic. I really enjoyed this one. And it's short, too. Sometimes the stories are quite long. But that's because they take long to explain. All right. Well, folks, we got clickbaited by Democrats. Now, that's not to make fun of Democrats. It's also not to make fun of Republicans. Remember, I try my best to be in the middle. It's just to say we got clickbaited. And that's because in a new report out from Goldman Sachs, the actual Inflation Reduction Act, which was supposed to reduce the budget deficit. You remember that? The idea was we're going to pass the Inflation Reduction Act because it's actually going to reduce government spending over 10 years because we're going to hire 80,000 new IRS agents to audit more Americans and get more taxes for our spending programs. Well, the idea was it was going to reduce our budget debt. But according to a new report by Goldman Sachs, apparently all of the subsidies in the Inflation Reduction Act are actually going to cost 3 times more than originally estimated, potentially up to an additional $1.2 trillion. The Congressional Budget Office originally forecasted that the green subsidies would cost around $391 billion between 2022 and 2031. And that number would then be offset by more auditing via IRS agents and recaptures and cutting in whatever places. Well, unfortunately, since that $391 billion in spending will actually be closer to $1.2 trillion in spending, according to Goldman Sachs, it appears that accounting tricks have helped reduce the way the Congressional Budget Office actually ended up calculating what the cost of the Inflation Reduction Act was, which means that congressmen and women were actually misled on the costs of the Inflation Reduction Act by a factor of 3, which also means the tailwinds for the energy sector and the electric car sector and battery sector are probably 3 times as great as what we previously assumed them to be. So this is kind of like a good news, bad news piece. But I was excited to talk about this because Matt Kors, sup man, popped in and said, why is everyone so focused on fighting inflation via Fed rate hikes rather than slowing down government spending? Well, it's because even when the government tells us that a temporary program is going to save us money, it actually ends up costing more money. Because after all, there is nothing more permanent than a temporary government program. Let that one sink in. So, how exactly? Well, here you go. Electric vehicles are going to be about $380 billion more expensive than previously thought. Why? Because more vehicles are actually meeting the criteria than the Congressional Budget Office previously estimated. Remember at the beginning of the year when everybody freaked out that some SUVs were eligible for the $7,500 tax credit and the Tesla Model Y wasn't eligible for it along with some other vehicles? Why did it seem so stupid that Congress would pass something that would give electric vehicles a $7,500 tax credit, but only some and not others? It almost felt politically motivated, or it was an accounting trick from day one to get the bill to pass under the guise that, oh, wait a minute, this is not going to cost that much, let's pass it. And then you got clickbaited and it actually does cost a lot. Now, I want you to know something before I go through some more of the details here, okay? This is really important. I know it's not a reminder to check out the sponsored links on life insurance or the courses on building your wealth or 12 free stocks with Webull in the links down below in the description. It's actually a reminder to teach you something very, very important about politics. Democrats generally want to pass more spending. That is obvious. I think we can all agree with that, right? Republicans generally want less spending. And Democrats like potentially higher taxes, and Republicans sometimes like lower taxes, right? That's a general theme. That's not true in every case. It's not true for every person, but that's a generalization if we were to make one, right? But watch this, okay? You ready for this? Because this is the most ridiculous part about politics, and you should vomit over this. In fact, it's so ridiculous that I'm going to draw how ridiculous it is for you, okay? Watch this. So, when a Democrat raises spending and they say, you know what, we're going to make spending go up. That is, we're going to spend more money on green energy, and we're going to raise taxes or whatever. What usually happens is Republicans get mad because they don't want to raise spending. So Republicans potentially then get voted into office, right? So when you see a Democratic regime turn into a Republican regime, what do the Republicans do about that increased spending? Do they cut that increased spending? Well, wait a minute. What is that increased spending? Well, that increased spending is actually a subsidy for EVs, like electric vehicles or solar or whatever, right? Or solar or energy products, right? It's a subsidy, which means it makes it cheaper for you to buy it. But wait a minute. If Republicans get rid of a subsidy, then getting rid of the subsidy is actually a tax increase. And Republicans don't like tax increases. Oh, God, no. We don't want to increase taxes. So what happens? Democrats spend more money, and the Republicans don't cut the subsidies because that would be a tax increase. And they don't like that. So they keep the programs. So in other words, in a nutshell, any temporary program from the government basically turns out to be permanent. Because if you rug pull it away again, you basically just raise taxes. And nobody wants to do that. So politics is a joke. With that said, let's keep going. So electric vehicles are expecting to cost $379 billion more thanks to expanded definitions of what kind of vehicles are actually covered. Ford's battery plant, in partnership with the Chinese CATL battery manufacturer, which is a Tesla supplier as well, will cost the government approximately $1.5 billion a year in credits alone. This will help reduce the cost of battery production about 35 to 42%, which is fantastic. Listen, I want you to hear this very, very closely, okay? Listen very closely. If you like investing where stimulus checks go, look at pricing power, electric vehicle plays, energy plays, and chip plays, because the government is sending massive billions of dollars of stimmy checks to them. And if they told you the number was X, you could basically say the number is 2 to 3X, because that's what happens with government spending, which means it's kind of like they're sending a stimmy check to you for $1,000, but when you get it, it's accidentally $3,000. And you're like, just not going to say anything. So, hello, if you're investing in stocks, think about that for a moment. And yeah, wherever Steve is, yeah, that could be a boon for commodities as well, even though I hate your pet rocks. Anyway, so the idea now is that Goldman Sachs is forecasting this $1.2 trillion overage might actually, okay, now it just gets ridiculous. You ready for this? This gets ridiculous. So the government program that was supposed to cost $369 billion is actually going to cost $1.2 trillion. But wait a minute. Now apply the velocity of money. That is, when $1 is spent, it creates $2 to $3. Goldman Sachs actually thinks that the $369 billion in government spending that creates a $1.2 trillion set of actual spending will be worth $3 trillion of investments into green energy across the economy, thanks to the velocity of money. So, let me be clear again. If in the short term you want to trade stocks, that's fine. You can jump on over here and use yourself Webull and do it all you want. It's a fantastic app. It's my favorite. It beats like the TDs and the Fidelity. God, those things are... Anyway, my favorite. Get 12 free stocks when you sign up. Link down below. But what it actually means, in my opinion, is that companies like Enphase, Tesla, NVIDIA, AMC, these are all companies I own, SolarEdge. So yeah, I'm talking my book here, but I'm also reading a Wall Street Journal piece going, holy crap, that's even, like, I invested not even realizing how good it was going to be. It's going to be freaking amazing. So keep that in mind. Now, it's also, this is interesting for those commodity buffs, okay? All of this green spending could actually lead to higher oil and gas prices. I'm sorry, okay? I'm not trying to like take your mind and like throw it one way and then like yoink it back the other way. Okay, I'm sorry. But yes. Now, why would that logically be true? Because oil and gas companies invest in big green projects. BP, British Petroleum, you know, the oil spill bros, they have half as many EV chargers as Tesla does. That's crazy. It's a petroleum company and they have half as many EV chargers as Tesla does. Because they want the credits, man. They're like, oh, give me the credits. I want to motorboat the credits. I mean, you can't blame them because there's so much money. Here, want credits for wind farms? Here you go. Want credits? Occidental Petroleum. Warren Buffett invests there. What do? Massive carbon capture technology. Loses money hand over fist. Have credits. Have credits. Have credits. It's government socialism for oil companies in the form of green energy. Yeah, it's actually happening. So, what do oil companies potentially want to do? Well, potentially invest less in oil fracking or gas refineries because you're going to make a lot more money off tax credits doing green projects instead. Yep, that's what's happening. In fact, listen to this. Last year, Ron DeSantis, Ronnie Donnie in Florida. What does Trump call him? Ron DeSanctimonious. I don't think that one's as good. But anyway, Ronnie last year vetoed a bill that would have reduced solar subsidies for homes because he called it a tax. So what I talked about earlier is the perfect example of how government can expand under Democrats and stay expanded under Republicans. And Ronnie just did the same thing last year in Florida. And I love Florida. Look, I spent 16 years growing up in Florida. I love Florida. Florida's fantastic. It'll be fantastic for my startup house hack as well. Go to househack.com to learn more. Investing deadline March 31st if you're accredited. Not accredited, hopefully May, June. Hopefully. Let's see. So anyway, where's some of the other money going? Green manufacturing, $156 billion more. Energy efficiency, $42 billion more. Hydrogen, $36 billion more. Biofuels, $34 billion more. Renewable production, solar, wind, geo, $82 billion more. Blah, 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 blah. Okay, I don't think we really care so much about those specific details. What we do care about is the fact that if you think the Inflation Reduction Act is free, you're wrong. It's going to cost $1.2 trillion, according to Goldman Sachs, more than we expected via the Wall Street Journal. What does that mean for us as normal people? Well, it probably means that investing in things like EVs and energy companies will get a lot more money than we previously thought. And it probably extends to the CHIPS Act as well, where we're basically paying for companies like Intel to go make new plants, and they'll end up getting a lot more money than you expect. I mean, right now, there are still fights going on in the auto lobby to get the Treasury Department to loosely interpret more EV tax credit rules. There's a reason why when you go to Tesla.com, they go and say, hey, you got to buy a Tesla before the end of the month because the government's taking away the tax credits. They're raising your taxes. There's a reason Tesla's doing it because A, it's a good marketing pitch, and B, it's pressure on the government. Now, Investing with Kendrick has a response and says Kevin is the new top G. That's impossible. I'm not in jail. Ooh, too soon. Oh, sorry. I shouldn't do that. Sorry, I'm getting too excited. Anyway, I'm going to push this button now. Did it work? Yeah, there we go. So, smash that like button. Get yourself life insurance in as little as 5 minutes. Link down below. Get 12 free stocks by going to metkevin.com/free. Join me in the private live streams every day now. Course member live streams for every course member Monday through Friday, usually when the market's open, and elite hustlers on weekends. So check out those programs. Link down below. And yeah, thank you. Ooh. Next. All right. Next. So, some people ask me, so I've been on my plane for like, I don't know, like 200 or 300 hours already in just like 3 months, which is insane. And some people are like, how do you spend so much time on a plane? Like, isn't that miserable? And I'm like, hell no. It is the most enjoyable part of basically what I do, because I could literally sit there in peace and quiet and just research and study, which for either whether it's YouTube or it's for our ETF, or it's just understanding news, or it's looking at deals for House Hack, or it's setting up showings for House Hack, whatever. It's really kind of cool. Really, really like it. So we're pretty excited about it. You can go walk up to the pilots and joke with them. That's pretty fun. What was my latest joke? Where's my latest joke? Let me see if I can get my latest joke here. Oh yeah. Yesterday I was texting with Lauren, and Lauren always gets nervous when I go flying alone, because it's like, hey, like, don't meet any girls. And I'm like, I text her, and this is a true story, by the way. I'm like, you want to see the only sign of girls that I've seen? And I'm not going to mention the city name here, okay? I'm not going to mention what city this was. But one of the cities I went to, I told her, I go, Lauren, let me send you the only sign of girls that I've seen in this city. Ready for it? There it is. That was the only sign of girls. I kid you not. A physical sign. A flashing sign. I'm like, get me out of here. Oh, God. All right. Next. So, yeah. All right. Let's see here. Okay. This is so ridiculous. So, let's do... Oh, the short seller topic. Oh, wow. We still have topics, man. All right. Let's do... Yeah. All right, let's do the short seller one. All right. Okay, this was ridiculous too. All right, 10 seconds here. Now we got to talk about short selling real estate. Yes, many people have been asking, hey, Kevin, should we short sell real estate? And if so, what should we short? And in this video, we're going to go through my opinions on shorting real estate, and I'll give you a little bit of an update as to what I think is going on in the real estate market. So we'll go through all of this starting right now. So first, anybody remember this guy, Jim Chanos? He's like a legendary short seller. He was the guy who's like, I'm going to short AMC, but I'm going to go long Ape because they're economically the same, and I want to take advantage of that spread. Now, when he said that on CNBC was about a day after I released my video saying, dump APE. This is not the same. It's going under $1. It did end up going under $1. Jim was wrong. AMC also converged down. I just want to give you that background on that's the last time I remember hearing about Jim Chanos, and now we're hearing about him again in shorting real estate. And so what is he shorting right now? Well, right now he's actually shorting ticker symbol SLG. It is a commercial real estate company in New York City. And I think these people are lashing out right now for one very simple reason. Actually, there are many reasons, but let's start with the first one. This is the investor presentation from SL Green Realty Corp for the year 2022. And I kid you not, but look at them lash out on page 5 of their investor presentation to show you how bad the economy is right now. You ready for this? Page 1, 2, 3, 4, lash out. The state of the economy. Jerome Powell, photo. I'm going to hike interest rates until you morons stop trading monkey JPEGs. This is literally in a multi-billion-dollar real estate company's investor presentation. An NFT JPOW meme is in their investor presentation. They must be doing really bad because they're lashing out. And they're also lashing out at the metaverse. Look at this. Metaverse, that little square, $20,000 in 2021, $1,500 in 2022. They're making fun of the metaverse and NFTs while they're losing money hand over fist and getting shorted by people like Jim Chanos. So now if I go over to their actual fundamentals, we could learn a little bit more about this company. So let's go to their annual report, and you don't even have to look very hard. Like sometimes people think fundamental analysis is like super overly complicated, and I teach it every single day in our course member live streams almost. It's really not that hard. But I do my best to provide perspective on it. And if you want to get caught up, check out the courses on building wealth link above. But anyway, look, you don't even have to look far. Revenues, 2020 revenues, $804 million. 2021, $678 million. 2022, $671. So their revenues are going down. But not only are their revenues going down, but unfortunately, they are losing money. See, look at this. Loss on sale of real estate, $84 million. Equity lost from unconsolidated joint ventures, $57 million. Now they're going negative. So they're losing money. They used to actually make money. Now they're losing money. So some people are starting to short the company, thinking, you know what the best thing to short would be in an environment where commercial real estate could potentially face somewhere around 20 to 30% defaults and maybe 10 to 15% liquidation write-downs? Well, how about a company that happens to own a ton of buildings in the biggest office market basically in the world? This one. Look at all these trophy properties they own. A lot of them that just nobody really cares about right now. Now, sure, you got some restaurants and hotels and stuff like that, but who wants the old office buildings anymore? They call them trophy assets, but some of them are like trophy toxic. Look, they even have to talk about redevelopment renderings because the office space is getting whacked so hard. Now, I know that's a little oversimplistic here. The argument is, how could you potentially short commercial real estate? Well, you could potentially follow this Jim guy into shorting SLG. Now, I'm not long or short SLG. I personally don't short real estate, and I'll explain why in just a moment. But before I explain why, it's important to remind you that a lot of people actually bet on what are called CMBX. Now, these are credit default swaps against commercial mortgage-backed securities. And so basically, they're making the bet that if mortgage-backed securities go down, then the cost to protect against their loss in value will go up. So you could potentially bet against offices by going long credit default swaps on commercial mortgage-backed securities. In English, you could short commercial real estate by going long the insurance policy to protect against the downside. I don't think that was any better of an explanation, but it's the best I got. CMBX is what a lot of people use for that. However, this is a big warning. If you've read any history on finance, there's something known as the Widowmaker trade. It is this. This is the Widowmaker. And it's called the Widowmaker because younger traders often think this is it. Commercial real estate's going to go down, and they got their finance degrees and they're really excited. So they go to the BBB minus CMBXs and they go, hey, let's go long the insurance or just straight up short it. Short actual commercial real estate. and then it takes forever for real estate to actually go down, and you lose all your money, and then you divorce and go bankrupt and you're miserable. That's why they call it the widowmaker. Another option that you could use that might be a little bit more simple is you could short iShares US real estate, which is an ETF. Right now, though, that position is already 40% short. It is the most short that it has been since June, which isn't great. It's very difficult to actually short a real estate because the stock market tends to move in a different way than the real estate market tends to move. Now, what some other people will do is they'll actually go long DRV. That is a daily 3x real estate short. Now, year to date, that's up about 5%. Year over year, and it's very volatile, that's up about 55%. But the problem is the stock market and real estate cycles are very different. And because real estate moves very slowly, both residential real estate and commercial real estate, you have to be really careful trying to play the stock market the same way you try to play the real estate market. And that's because, and this is why I don't like to short real estate. In my opinion, the stock markets crash and then they, in a volatile way, rotate back up in the long term. Basically, in the long term, it looks like a Nike swoosh. The problem, though, is the real estate market is very sticky. The real estate market bubbles up and then it kind of stagnates. And the reason it takes so long to actually see pressure is because it takes a long time for companies to actually get forced into liquidating. REITs, institutions, pension funds, they can be very sticky for a very long period of time. And real estate really only updates its valuations when there are transactions. But if there are less transactions, then you actually have less price discovery. In stocks, you get price discovery basically every single day. As soon as there's a new piece of information, you get price discovery in the stock market. Doesn't work that way in real estate. In real estate, interest rates could go up literally just like they did, 4% in a matter of 6 months. And real estate prices year over year are still up 15%. Because you don't have immediate price discovery. It sometimes takes a year to 2 years for real estate to actually bottom out. Now, SLG, the company we started with, they're actually just now, in March of 2023, a year and 3 months after I started getting worried about the real estate market and I started dumping my real estate, they're just now thinking about selling their real estate. And that's because well, first of all, they're losing money, so they need to raise money. It's also harder to raise money in debt right now to keep going with other investments and other opportunities, so you just liquidate whatever else you might have to be able to do other deals. But what that could do is that it could actually push a downward pressure on real estate, as in a weird way, this could happen. We don't know this, but it could happen. Pay attention to it. In April, May, and June, you could potentially, no guarantees, see what's called a sudden surge in inventory. And if you see a surge in inventory, whether those are office buildings, whether those are retail, whether those are single families, whether those are multifamily, if you see a surge in inventory, while you have fewer buyers that you have today, you will very likely see prices continue to fall. Now, people say, but Kevin, if inventory goes up, why then should I not short those stocks? Well, the problem with shorting the stocks is if the ocean of the stock market is actually rotating up, then it's possible that you're basically fighting this really hard headwind. That is, stocks are going up, which is like a headwind against your short. So everything's wanting to go up, but the real estate market is actually just now showing its stress. And because it takes so long for sometimes real estate pain to come through to fruition, and people think somehow real estate should align and be as quick as stocks, it doesn't end up working. One of the things that everybody who works with me realizes, new people who come working with me, whether they're interns or employees or whatever, one of the things they realize is, damn, people don't understand boots on the ground real estate. And that actually creates a massive arbitrage opportunity. And that's why we're creating the real estate startup that we are, because boots on the ground real estate isn't understood by people sitting doing Zoom calls and Matterports and spreadsheets. It's a very, very different way of thinking. So how do you take advantage of that potential dip? Well, in my opinion, you become the boots on the ground in your own area, and you learn how to actually buy your own real estate, and you buy that dip in real estate. You don't have to be perfect. This is the important thing to remember about the real estate cycle, or really any market cycle. Market cycles are just like this, okay? Ideally, you want to just buy on the bottom half. This is where you want to buy. You want to be on the bottom half. You don't want to be on top. You want to be on bottom, okay? Bottom, good. Top, not good. Over here, this is where you want to be trimming, right? This is your top. It's simple. DCA here, buy on the green, and DCA sell on top. Simple. And so in my opinion, we are trending towards that bottom over here. Now, do I know that we're there? Nope. We could be here, or we could be here. We don't know. All we do know is we're off peak. So TBD. But this cycle does not align with this stock cycle, right? So the bottom of real estate could literally be, and we've talked about this for quite a while, the bottom of real estate could be over here. That could be Q1 of 24. And the stock market could be way higher in Q1 of 24 over here where you have this intersection, right? So that's actually one of the reasons why I personally have moved a lot of money into stocks to ride the Nike swoosh. I've liquidated real estate, put it into stocks, because I think when real estate is lower, stocks will be higher. That's my bet, and that's my belief. But it also gives you some insight into potentially, if you wanted to short real estate like Jimbo, how you might be able to pull that off. So now, make sure you get yourself 12 free stocks by going to metkevin.com/Webull. You can make that very simple. They've got a really cool phone app that you could use, and you get 12 totally free stocks signing up with them. You also get life insurance in as little as 5 minutes, and check out the programs on Building Your Wealth, link down below, including Stocks and Psychology of Money, Lead Hustlers, and the Zero to Millionaire Real Estate Investing course. Once you're ready to advance, do-it-yourself property management is also an option for you. Check those out. Linked down below. Thank you. All right. Next. All right. Oops. There we go. Next. What do we want to talk about next? Does anybody have any commentary? Spot short BTC? No. I ain't got time for that, man. Just gonna be transparent with you. Somebody actually had a great line. Somebody quoted me saying this. Where was it? Let me get you this quote. I thought this was really good. A good quote. A great Kevin quote. Somebody else's words, not mine. Let me find it. Stand by. Where is it? Quote. Let me put a key. Got it. Okay, here. So one of my course members just said, Meet Kevin made some comments during today's course member live stream, which may help folks better understand his areas of concentration for investments. And they quoted me and they said the following, quote, I believe the goal of investing is to generate cash flow. I don't do commodities. I don't do gold. I don't do oil. I don't do copper. I don't do lithium. I don't do healthcare. I don't do military industrial complex. These are just things I don't put a lot of my money into. I don't understand them completely. I do high free cash flow companies that are growing and real estate. That's what I do. That's what I know. That's what I like. I feel like that's what I'm good at, and that's what I'm going to keep doing. Meet Kevin, 32323. That's cool. So anyway, I thought I'd share that because I thought it was actually a cool quote. So shout out to you, UW Wolfie. UW Wolfie, you. Anyway. All right. Kevin, the demand for rooftop solar like Enphase is getting accelerated because of remote and hybrid work. People are buying to make homes more efficient. Maybe, man. There are so many ups and downs, man. You could say more people doing remote work means up. You could say housing market going down, Enphase down. You could say solar subsidies, Enphase up. You can make an argument in every which direction, man. All I do is I look and I see the Fibonacci lines on. Like fundamentally, it's a fantastic company. So then I look at the Fibbies, and when I look at the Fibbies for on Webull, I go, is Enphase at a place where I want to buy it? Yes or no? And then I make a decision. So here you go. Look at that. Look at where we are. Around this line, I like it. I like it even more closer to 164. Do I think we go lower than that? Probably not. Could it go down, 120-ish? Maybe, but I don't know. I'm load the truck 164. We'll see. We'll keep an eye on this. It's an interesting pattern so far, so we'll see. Did you not see my super? A lot of stats for you if you want to sprinkle your opinion. No, I didn't see it. You gotta get me in between. Like if you want to send a super, send it in between a segment. A lot of charts sound curious. Okay, you sent that again. Well, where is it? Oh, you want me to Google 71? Oh, well, that it's gonna be leaving the gold standard, isn't it? It's leaving the gold standard. It's not something we're really going to have time for right now, but I will. Let's see. What is this? Growth, productivity, hourly compensation since 1948. Oh, that's interesting. So first glance, some people actually talk about this as like this is explained away by basically unions, right? Like, hey, as the unions lost power, real wage growth plummeted. But that could also be explained away by commodities and that. I'll have to go through this. So anyway, somebody's writing this. This is called What the F Happened in 1971. I mean, this is leaving the gold standard. But it would be interesting. Take a look at it. Thank you. I think you sent like $15 for me to look at it. So I'll leave it right there. But I do have some more stuff I got to cover. Anyone else have any questions? I'm not a sprinter. Thank you for asking for my mile time. But no, I when I'm home and it's sunny, that's my condition. When I'm home and it's sunny, which usually it is in California, but the last 3 months have been hell. I'm gonna write a letter to Gavin Newsom and demand a refund of some of my income taxes because the weather has been so trash. It's like, why live in California? Weather. What's the weather been? Trash. So why am I here? I'm getting bogged, man. So anyway, yes, I try to run like 4 to 6 miles when I'm here and it's sunny. It used to be every day, but now I had this idea to go fly around. People are like, oh, Kevin bought a jet to finance his lifestyle. Are you kidding me? If you think a lifestyle is sleeping 5.5 hours a day, running around to appointments and working your ass off at 3 different jobs, go for it too. By all means, have at it. Do I still play World of Warcraft? Dude, I have not played a single video game since the day I bought this plane. It's like playing did not make me have more free time. It made me work more. What the hell? All right. 30 to 60 minutes a day is enough. You think I got 30 to 60 minutes? All right. So let me go to this next topic. Get rid of the plane. Dude, I can't get rid of the plane. I'd be screwed. I got to keep that thing for like 5 to 10 years, man. You can't. Once you're in, man, it's a Venus flytrap, man. You can't get out of those Chinese handcuffs, man. Once you're in, you're effed. You're in. That's why they give you tax deductions to buy a plane, because they know once you're in, you're going to spend money like a drunk sailor. It's insane. All right. Okay. Yes. Hexflex says I have a plane because of white privilege. Okay. All right. Here we go. I'm just gonna keep going on. So the next topic is Congress lashing out. All right. Some people don't like the politics. Oh well. All right. Oh boy. Oh, I should pull this up first. Hold on. This is gonna take a second. I gotta find it. Does anybody else have a rented jet? Keck. Keck is LOL in World of Warcraft. And then that's when the Horde says it, and it's Burr when the Alliance says it. No, it definitely ain't rented. That would be way more expensive. That would be unaffordable. Okay, so talking about different levels of unaffordability. I know. That's bad. All right. Hold on. I got to find my darn notes. Oh, I think I got it. I got it. Okay. Oh, scheiße. Put your jet on Turo. Hell no. Dude, I don't want anybody else in my jet. It's my PP. Only I decide who rides my PP. And right now, that's like no one. I want to be alone. Got it. Got it. Okay. I'm not an alliance mage. What? You think I'm an alliance mage and I just walk around like this doing AoE? Come on, man. I'm a freaking rogue. I'll stab you in the back. That sounds terrible, but that is what rogues did. And I was a rogue, and I was a tree druid. I had to make up for all the sinister strikes and backstabs, kidney shots. So I was a tree druid, and I gave life bloom in the Burning Crusade. That's all. Then I turned into just doing this. That's all I did, and I became Merciless Gladiator Season 2. That was fun. That was my World of Warcraft peak. Shaman and AV. Throw people. You were one of those assholes? I hate you. Throw people off the cliff at Mill. Oh, gosh. All right. Enough of the World of Warcraft. You're going to make me start wanting to play again. Although my computer broke. So I couldn't even game if I wanted to right now. Okay. I don't want to get more feathers in Assassin's Creed. No. I spent too many hours doing that. I just want to talk about Trump right now. And all you guys are doing is talking about video games I know and love. All right. Okay. What are we going to do? Trump. Oh, yeah. All right. Ready for this? This is crazy. Let's push the button. Let's get started. Oh, yeah. All right. Here we go. 10 seconds. Well, Donald Trump has Congress doing his bidding for him. Congress just sent an 8-page complaint to the district attorney, Mr. Bragg of Manhattan, demanding they turn over information that they have on Donald Trump. Now, this is phase 2 of the saga. They started with an inquiry letter to which the district attorney replied and said, hey, y'all are overstepping your authority, Congress. Back off. This is a local case for a local prosecution against Donald Trump, and this is our case. And that was their response to a congressional request from a committee of 3 individuals. The first time, that was their first response. Now, Congress has responded again, and you're going to love their response. But first, I want to touch on some of the various different allegations that are being made against Donald Trump. And there are a lot of them. I'm going to go in reverse order. And I'm going to keep them somewhat simple, just so you can kind of maybe, like, if you're keeping track, you can kind of just number them. So first, we've got the insurrection, right? Crime to incite or aid in the comfort of an insurrection. Call it what you want. That is what the allegation is, okay? It's not me calling it an insurrection. This is what the allegation is. So that's one. The next is conspiracy to commit wire fraud. And a lot of this has to do with $130,000 of hush money payments in 2016-17 that went to Stormy Daniels. Now, apparently, through recordings that we've heard, this money went from Michael Cohen to Stormy Daniels, and then potentially was reimbursed to Michael Cohen, for who was Trump's fixer at the time, was potentially reimbursed to Cohen indirectly through shell companies. Now, there have been a lot of circulating documents on Twitter suggesting that, wait a second, Donald Trump never reimbursed this $130,000 of hush money payments, because here are legal letters showing that that never happened. In fact, that legal letter that keeps circulating is right here. It's this legal letter that says from 2018, which is stamped highly confidential, which quite frankly, anybody could stamp that on there. And it's this counsel for Michael Cohen suggesting that, hey, look, Michael Cohen used his own personal funds to facilitate that $130,000 payment to Stephanie Clifford, which is Stormy Daniels' real name. And neither the Trump organization nor the Trump campaign was a party to the transaction with Clifford, and neither reimbursed Mr. Cohen for payments directly or indirectly. That's fantastic. And people on the right are saying, that's it, case closed, Donald Trump is free, Donald Trump never paid that hush money payments. But wait a minute. This letter itself is very carefully worded. It says neither the Trump organization nor the Trump campaign reimbursed Michael Cohen, right? But others are saying it was Donald Trump's family trust that reimbursed Michael Cohen. See how you could trick people? Trump organization is one entity. Trump campaign is an entity. Trump family trust is another entity. So that other entity could have reimbursed Michael Cohen for that $130,000. Now remember, this guy's a convicted fraudster, Mr. Cohen. So I don't really hold much esteem for Michael Cohen's attorney, which is who wrote that letter. And I wouldn't put it past them to sort of manipulate the facts in such a way. Donald Trump is also being alleged for potentially Article 175 in New York, falsifying business records, suggesting that there is was bookkeeping fraud that had happened. That could potentially carry a 4-year sentence, but you would need to prove that he knowingly caused false entries into company records, quote, with the intent to defraud. There are campaign finance violation allegations, the allegation that potentially this hush money payment was made via the campaign, which Donald Trump has argued no, the campaign would never make such payments to Stormy Daniels. And this is where you have the New York District Attorney potentially elevating this particular crime from a misdemeanor to a felony, which will actually be really important in the congressional response, because they destroy the New York District Attorney for basically de-escalating most felonies to misdemeanors and still only having about a 50% conviction rate. Then there is an argument that 103 classified documents were found with Donald Trump. Theoretically, there's a 10-year penalty for every document that you knew you were in possession of and failed to comply with returning when you were asked. And then there's another charge about criminal intent to conceal records. Now, the only way this would actually stick is if a court could show Donald Trump knew he had files that were responsive to the National Archives efforts. That has a 20-year penalty per offense. Mishandling of documents criminalizes the concealment or destruction of documents, basically alleging that potentially Donald Trump tore up pages. There's the contempt of court charge, which is disobeying a subpoena from May of 2022 to turn over documents because later more documents were found. There's a conspiracy to make a false statement, which would make it a crime and would be a violation of the law to lie about other documents being available. But then again, they'd have to prove that Donald Trump knew about these. And I'm just giving you all of these potential charges against Donald Trump, right? Then there's the Georgia election charge that Donald Trump pressuring the governor and Secretary of State to find additional votes was really a crime to solicit someone else to commit election fraud. But that, a lot of these feel a little stretchy, because really then you have to ask, well, was Donald Trump just saying, can we double check to make sure there aren't illegally cast votes? Or was he asking, can you just get me some fake votes, right? Like, that's going to be very difficult, I think, probably to prove in court. There are also potential crimes of RICO laws, racketeering laws, which are usually violent in Georgia. RICO laws are usually related to violent breaking of laws. But there could be RICO claims for the solicitation to make false statements or forgery related to that Georgia phone call. Then, of course, you have January 6th, which we talked about already regarding those insurrection claims. So these together are sort of all of these claims that are being thrown against Donald Trump. And people on the left are very frustrated because they're like, how is this guy Teflon Don? But then when you look at every single one of the claims individually, there might not be the biggest smoking gun. Not because maybe Donald Trump didn't manage to kind of skirt the way things were supposed to be done, but because of the legal standard. That's the fight. This isn't Democrat, Republican. I mean, even though it is, we know it is. We know it's Democrat, Republican. But when you look at the legal standard is so high to prove that how do you go to a court and somehow prove, oh, he knew the documents were there. He knew how many there were. He knew exactly where they're. How do you prove that? Even if Trump knew, how do you prove that he knew, right? Remember, in a criminal case, you have to convince a jury or a judge beyond a reasonable doubt. And if there's any doubt that Donald Trump didn't know about these documents, if there's any doubt that he didn't know exactly what Michael Cohen was doing, if there's any doubt that he didn't know exactly what his words meant when he said them on January 6th, because he would have not expected that people would have actually broken down doors and windows at Congress, then it's kind of hard to convict because there's doubt. So it's kind of interesting. But what's very fascinating is this congressional response right here. And this just came out yesterday. And so this is a letter to Alvin Bragg, the district attorney of New York, bagging on him and saying, yo, now remember, at the beginning of this segment, what did I tell you? I said, Congress wanted information on Trump. The response from the district attorney was, dude, no, this is not your place. Like, back off. This is our case. You don't deserve to have any insight into these documents because you have no jurisdiction here. F off. Like, this is on us. So go away. And what do we actually have now? Well, Congress comes back with yet another argument. And their argument is pretty detailed. And I think it's definitely worth going through. So let's do it. Look at this. In reply, it's worth noting that the allegations of potential pressure from the left that Congress is making against the district attorney was not addressed at all by their office. In other words, these individuals who are writing this letter in Congress, which are Jim Jordan, the chairman of the Committee on the Judiciary, Brian Steele, the chairman of the Committee on House Administration, and James Comer, the chairman of the Committee on Oversight and Accountability, these chair folks are making the allegation that, hey, in our first letter to us where we said, you guys are basically just folding to political pressure from the left and you're weaponizing the office of the district attorney. You didn't even address that in your last letter. And why are you upgrading a misdemeanor charge against Donald Trump to a felony using an untested legal theory at the same time as you're simultaneously downgrading other felonies in your jurisdiction? So what has happened here is the district attorney has really poked the bear. They've poked the bear, and now all of a sudden you have a very upset Congress. And some of the arguments they make here are very interesting. So they say here, first of all, this is extremely important for national purposes, because if a president ever in the future avoids taking an action he believes is in the national interest because it would negatively impact a local jurisdiction because of fear that they would be subject to retaliatory prosecution from a city, then Congress needs to know about that. And that's basically how they start over here. So they make this argument that, look, this is a national security issue, because really what you're doing is you're saying, hey, if a president can get sued after they leave office, then what happens in the future if another president gets in? Let's say, Robert Jones is president in 10 years, and Robert Jones passes a law or signs a law into effect that hurts New York. What if after he's done, he gets prosecuted? That's the argument that Congress, these three individuals in Congress, are responding with. And they are threatening to potentially take legislative action to potentially protect former or current presidents from politically motivated prosecutions. Now, I wrote a little note here and I said, LOL, empty threat. And that's true. There's probably not going to be any legislative action between now and the 2024 election, because after midterms, very little gets done other than what is necessary. But I did actually write that I thought this was a very nice count, like a pretty solid counter by Congress here. Like, look, this is the responsibility of Congress because it affects how presidents potentially act in the future. It's actually a good point, especially since Bragg, when he campaigned for office, said he felt convinced he wanted to prosecute Donald Trump based on what he publicly believed was enough evidence to prosecute Trump. So it's kind of like he went into office and got elected with a mandate to prosecute Trump, and now he's prosecuting Trump. And of course, the left is arguing, good, Donald Trump deserves to be taken to justice. And the right argues, what the hell? Like, you're supposed to see a crime and then investigate, not investigate somebody and then find crimes. Like, it's backwards because you're weaponizing the office for political purposes. Like, that's not how it's supposed to work. It's not like you're supposed to say, whom do we think deserves to go to jail? Trump. Okay, how are we going to get him in trouble? Let's find something and stick him with that. And a lot of people are saying, this is scary. This is not how law enforcement should work. It should work the other way around. If you do a crime and you get caught, then you get investigated, then you go to jail, not the other way around. All right, keep going here. Congress argues that the Supreme Court has, and when I say Congress in the context of this video, it's important to remember it's those three representatives. So they make this argument that the Supreme Court has recognized a broad and indispensable power to conduct oversight thanks to a 1961 or 62, I can't remember, it was either 61 or 62, law or case law, Wilkinson versus the United States. And they created a three-pronged test to determine the legal sufficiency of basically a congressional inquiry. And basically, the standard is pretty light. It basically says any committee can investigate broad subject matter that's authorized by Congress, which could be appropriations. The investigations must be pursuant to a valid legislative purpose, which could be oversight. And the specifics of the inquiries must be involved pertinent to broad subject matter, which have been authorized by Congress. Basically, this three-purpose test is kind of saying, as long as Congress wants to conduct oversight, they can look into anything they want. So it's a pretty broad interpretation of case law, and it was a pretty broad case for what it gives the power to do. So they then argue that committees are authorized to conduct such an inquiry. They talk about how the last thing we want is a collision between the Secret Service and local law enforcement officials. They go on to talk about how, and this is what happens when you poke the bear, by the way, like your own faults come up. Listen to this one. Under your leadership, the New York County District Attorney General's office has adopted and defended your progressive criminal justice policies, which include downgrading 52% of felony cases to misdemeanors. Even with downgrading more than half of your felony cases to misdemeanors, your office's conviction rate when prosecuting serious felony charges was just 51%. Think about that for a moment. That's pretty incredible. So what they're basically saying is 52% of felony cases were downgraded to misdemeanors. Of that 52%, so if you have 100, that just turned into 52. Of those 52, only about 25 ended up in convictions. So in other words, your conviction rate on felonies is only about 25%. That's crazy. Yeah, there it is. You're convicted. Oh, well, and then look at this. Then it gets even crazier. Then it says, also, your conviction rate for misdemeanors is just 28%. So in other words, in New York, they're basically saying the felony conviction rate, when you combine the discounting of demoting felonies to misdemeanors, is only about 25%. And your misdemeanor conviction rate is only about 28%. So in other words, if you want to commit crime, Congress is basically saying, go to New York because their conviction rates are horrible. I mean, this is what happens when you poke the bear. Like, you kind of get exposed. So then they argue here, in fact, in a judiciary subcommittee here, last year, a mother of an Army veteran testified after her son was murdered in your district. She criticized your office's handling of her son's murder because you offered a plea deal to the defendants, despite the fact that the murder and their roles was caught on video. Yikes. That would definitely piss off a mom who lost their son and then saw plea deals being offered to murderers. So they keep going and talking about some basis. I'm really just wanting to show you the most interesting parts. They argue that Congress absolutely has the right to investigate because even though the district attorney says, hey, your requests are an unlawful incursion into New York's sovereignty, they say our inquiry does nothing to stop your duties. Oversight and inquiry is not something that distracts you from doing your job. It's a normal course of business. Fair argument. You know, that's kind of like saying, hey, if you got an SEC audit to make sure you're doing what you're supposed to be doing correctly, then that's not like saying, oh, well, now I'm distracted, I can't do my job. That is part of your job, to respond to oversight requests. Anyway, the court has further noted that a congressional committee engaged in legitimate legislative investigation need not grind to a halt whenever it responds to inquiries. Same thing I just said, basically. So they make their case here and they sign it. Please respond no later than March 31st. Now, keep in mind, they did not explicitly threaten a subpoena against Bragg's office, but let's just say a lot of people are really pissed, even to the point where bomb threats have been called into the New York Criminal Court. Apparently now a suspicious white powdery substance was mailed to the DA's office, which anybody who is probably older than like 25 remembers the whole like anthrax scare of the past. So it's kind of scary. So, and it's kind of wild to see all of the political drama on both sides around this. But my goal is to do my best to provide you insights on both sides. I know that's not like the most popular thing to do because then people are like, no, man, you're wrong. And then they don't actually tell you how they're wrong or that I'm wrong because my opinion is just different. My opinion is really designed to just be in the middle. Like when I look at something like that article on Twitter, or like 99% of the responses or that letter on Twitter, 99% of the responses to that letter on Twitter are people going, that's it. Case closed, man. It's over. Trump's free. No, like if you actually read it with detail, you could see where the holes are. And that's my point, is to show, I don't want to say like make people more jaded, but I do think we need more of that sort of critical analysis when we look at things. And I think it's a good thing. Like, hey, what I would do if I had any involvement in this is I would send a letter to that law firm and I'd be like, hey, you know, you all wrote a letter in 2018. Could you verify that it's not just the Trump organization nor the Trump campaign or Trump personally or his family trust personally that didn't reimburse any money? And if they don't say anything, that's kind of a smoking gun to some degree there, right? Because it's like, all right, you found the hole. Maybe not, right? Or maybe they respond and say, yep, no organization of Donald Trump. They didn't say no organization of Donald Trump reimbursed Michael Cohen for Stormy Daniels. They specifically said Trump org or Trump campaign. Okay, well, he's got like 20 other businesses. Maybe Trump Atlantic Casinos did it, or Trump University, or Trump's Trust. Yeah, the point is, these are all like these letters often seem like they're so conclusive, but they're really not. So anyway, I think that's very interesting. So with that said, I need to remind you to get yourself 12 free stocks from Webull by going to mettkevin.com/Webull. Check out now we have Buy Now, Pay Later, Affirm being the most popular, Klarna coming in second, close second there for the courses on building your wealth, linked down below. You can break up those payments in 3 months, 6 months, 12 months if you want. Generally don't recommend using Buy Now, Pay Later, but some people have been demanding it, so it's there. Check out those programs, link down below, and get your life insurance in as little as 5 minutes by going to mettkevin.com/life. Thanks so much for watching, and we'll see you in the next Meet Kevin Report.